fireside. We are legends. Tonight's the night. Yeah, we are legends. Tonight's the night. Yeah, so come along with me, 'cause we're making history. Yeah, we are legends. Tonight, a legend is born. Tonight, history is made. Tonight, we are the chosen. We got the keys to the town. Yeah. And no one's gonna take our crown. We're gonna bring it home and take them one by one. Yeah. Get up and knock them down and rise up like the sun. Are you ready to ignite the fire inside? We are legends. Tonight's the night. Yeah, we are legends. Tonight's the night. Yeah, so come along with me, 'cause we're making history. Yeah, we are legends. Tonight, a legend is born. Tonight, history is made. Tonight, a legend is born.
Recording in progress.
All right, welcome everybody. We can get the music off and we'll get started
Hola,
here.
bienvenidos a todos. Ya quitamos la música.
Oh, it looks like
Vamos a iniciar.
our Spanish interpretation. I can hear you speaking here. I'm going to mute you. And I want to make sure we are going to be translating here in Hindi and in Spanish here today. And we want to make sure that the translations are working properly. So please message me, on the chat here and let me know that those are working properly here for you. And let's see, this is, there we go. All right, guys. Well, welcome to Crypto Fest, Crypto
Ok,
Wealth
chicos,
Fest.
bienvenido a Crypto Wealth Fest.
Yep, looks like we're
Namaste
still
dosto, आज की
getting the
Crypto Fest में
translation coming through here. Let's see. I'm not sure why I'm able to still hear you in the Spanish translation. All right, we'll try this again. All right, guys. Crypto Wealth Fest, guys. We're going to go
Ok,
for the next couple
entonces el
hours here.
Crypto
नमस्ते
Wealth
दोस्तों,
Fest.
आज के क्रिप्टो वेल्थ फेस्ट में
Oh, we still have the translation happening here. You guys
Yeah,
are
it seems
not.
we have Spanish and Hindi on the same call.
Yep, we understand, right? But you guys should be connected as panelists in order to do the interpretation.
हेलो
Or can you send the link as a panelist? Because I accessed the link that was sent by Nicola. Or
Yep.
Nicole.
Yep, you are a panelist on here. Sorry, guys, stand by. We'll try and get this sorted out here for you. Let's see. There we go. All right, let's try this again. I think that we've got the translation turned on here for you. All right, guys. Well, welcome again to Crypto Wealth Fest. Crypto Wealth Fest is a global online event designed to educate and connect crypto enthusiasts from around the world. We are going to be going for the next couple hours here. This is a truly unique opportunity for attendees to gain insights from industry experts today, expand your knowledge on cryptocurrency. Again, we are translating live in Spanish and Hindi, and it sounds like we've got that sorted out here for you guys. My name is Gary Engels. I'll be your host today for the event. Today, guys, we're actually giving away 100 micro nodes today. And to qualify, all you need to do is you need to go on your phone. There's a couple of things here, but number one is you need to go on your phone and download the Debt Wallet app to participate in the giveaway. Let's see if I can just show you that real quick here. Let's see if we go here and Boom. All right. So you guys on this website on cryptowealthfest.com, you guys will see down here towards the bottom how to participate for a chance to win. Make sure you go through here. We're going to be giving away 100 micro nodes here today live on the call. So make sure you guys go through this. Make sure you download the Debt Wallet on your app. There's an Apple link and a Google link here on the website for you. All right. Before we begin, bring out your speakers today. I just want to reiterate the importance of crypto education. Education is crucial in the crypto space, especially for beginners and those looking to enhance your trading and investment strategies with the complex and ever-changing nature of cryptocurrency. Having a solid knowledge base is essential. That's what we're providing. Today is about education. Education provides understanding of blockchain technology, security practices, market dynamics, learning how to empower individuals to make informed decisions and manage risks, as well as building long-term wealth, fosters confidence and independence in navigating the decentralized and rapidly evolving crypto industry that we're all watching very, very closely and actively participating in. Guys, I want to highlight the importance of active participation today and engagement during this event. We have created a platform here for you to interact, to learn, to connect with other like-minded individuals from around the world. And through the comments section on the YouTube live stream or on Zoom, I encourage each and every one of you to make the most of this opportunity. I want you to ask questions, seek clarification, and share your valuable insights. I want you to engage in discussions, exchange ideas, and network with fellow crypto enthusiasts who share your same passion. That's what today is for. This is your chance to connect with industry experts and build a strong community of knowledge and support. And so let's make the most of this interactive experience. And together, we're going to unlock the true potential of Crypto Wealth Fest. Guys, allow me to introduce the lineup of speakers and experts today. Later, you're going to be hearing from Joe Martinez, Corey Cromray, Travis Flaherty, and Noah DeFreitas. And I want to begin with the future of crypto with Noah DeFreitas, a Series 65 and Series 3 licensed trader and crypto educator here with IX Global and on Driven Trading's platform. With IX Driven membership, you get to hear from Noah every week as he breaks down the crypto market and discusses opportunities and insights on emerging and relevant events in the crypto space on his live calls. And so with that, Noah, are you ready to rock? I'm looking forward to hearing from you, my friend. Let's see if we can get you out here.
I think I need permission to share my video and my camera.
I just made you a co-host.
All right, perfect.
You're ready to rock.
Ready to rock.
There you
Beautiful.
are.
All righty. Thank you so much, Gary, for the awesome introduction. I'm crazy excited for today's call. Really, crypto is something near and dear to me. I have a lot to go over today, so I'm going to go as fast as I can, but be as deliberate as I can. Again, this is a space that has changed my life, and I've seen this space change many other people's lives. So the main thing I want to show you guys right now is what I see the future of cryptocurrency as of today, and really just a quick glance of where we've come from cryptocurrency as well. So let's go ahead and dive in. The first thing I want to go over is everybody should be downloading the Xnode wallet if you do want a chance at getting those free micronodes. It's been a really wild experience being a part of the debt side of this equation. You'll have some wonderful speakers talking more about that side, but even if you're new, download the wallet and you'll be able to potentially get some free micro licenses. All right, so some of the narratives for cryptocurrency that I'm going to go over today are as follows. One is what's called the Great Accumulation. The next will be the race towards a spot ETF, and I'll explain all of these. The Bitcoin halving on the horizon, how programmatic sales are now in the clear, and we're going to talk about really the next steps here in crypto, which is the tokenized asset space. So the first thing I want to mention is the power of cryptocurrency. What a lot of people don't understand about cryptocurrency, a lot of people think it's like a joke, right? It's just a fad. Cryptocurrency is actually the best performing asset class by a multiple of 10 or even 100. And I think a lot of people don't understand that. I'm going to show you that because all of us are looking for opportunity, but if you don't understand what opportunity is in front of you, you might miss it, right? And like I said, when I got into the cryptocurrency space, the biggest thing that helped me know that this was a space for me was seeing that we were ahead of potential, inside potential and ahead of potential. Because what I want my followers to do, or the people I potentially, can impact, is I want them to be able to stumble across success. And if you're ahead of the wave, you're ahead of innovation, you can actually accidentally stumble across success. And I think when you're positioned in the next forefront, like cryptocurrency, the next forefront of our economy, that's where you can even accidentally potentially stumble across success. Okay, so just to get perspective, this is the total cryptocurrency market. I'm just giving you from 2015, so about 8 years ago, what the cryptocurrency market has done. If you can see that number at the top of my screen, that is 100,000%. In less than 10 years, 100,000%. That's incredibly wild. If you don't understand what that really means, we can compare it to other markets in our industry. So let's look at, say, the stock market, the S&P 500. If we take performance from the last 8 years as well, from 2015 to today, from low to high, the stock market has gone up 157%. So if you were investing in the stock market, your gains would be, around that number. Also, an average basket of cryptocurrency would be, in the larger market cap would be around that percentage as well, or an average basket would be around that 100,000%. So we take something maybe like gold too. What performance has gold had over the last 8 years? You're looking at 100%. So when you really see the difference between cryptocurrency, and yes, cryptocurrency is newer, that's where you're going to get a lot of these exponential gains, but understanding the power that we're in and where we can potentially be going, you'll see that at the end here is mind-blowing. So the question is I get a lot is what's happening to our current space versus, say, the crypto space or our next financial space? Well, there's something very, very specific that's different now than just a few years ago. And that's with our current dollar, if you're in the United States, at least. If you're looking at my chart right here, this is a picture of the money supply. And the money supply, you can see in just the last 3 years, has gone up around 400%, which means all the dollars in the United States have multiplied by 4. And this, you can see all the way back from 1975, has never happened anything like this in the history of time. So now more than ever, is it important to understand where is it safe? What's the potential of say, just our current economy versus other avenues? And I believe cryptocurrency, if you look at things like Bitcoin, where you can potentially have safety against these sort of government activities, where you see things like hyperinflation happen because of the overprinting of money. So if we look at Bitcoin specifically, you can see Bitcoin over the last 8 years has increased 32,000%. Pretty crazy. A lot of us think that we're late into cryptocurrency. We are absolutely not. The adoption of cryptocurrency right now worldwide is about 0.5%. So there's definitely opportunity. I'm going to show you something extremely powerful that's happening in the Bitcoin space as well, called the Great Accumulation right now. So one thing I do want to point out is you can see, even since really Bitcoin's history, I'll give you another view of this. This is Bitcoin profitable days. A lot of us think that Bitcoin is this crazy thing that goes to the moon and to zero all the time. Well, Bitcoin has been profitable 89% of the time at this price point, which is crazy. A lot of us think that Bitcoin is, say, profitable only sometimes. Sure, there's ebbs and flows, but if you zoom out, Bitcoin is largely profitable and one of the best performing assets of our time. So let's talk about this. Really, where I see the future of crypto right now is what I call the Great Accumulation. Right now, there's a race to buy Bitcoin, and it's happening under our noses. So if you look at this chart, this is the most important chart that I believe everybody needs to understand right now in cryptocurrency, especially when it comes to Bitcoin. This is how much Bitcoin is available on exchanges. Just like if you're asking like how much say shoes are available in a shoe store, how much Bitcoin is actually available in stores. And I'm going to explain this a little bit. So during 2018, there was one of the lower balances of Bitcoin, and that went up all the way to the COVID crash. And after COVID, yes, there was a bull market, but there was even a bear market since November 2021. But if you look at the supply of Bitcoin on exchanges, it's been going down the entire time to the point, and it's even lower than this, to the point where Bitcoin balances on exchanges are right now, they're actually 1.8 million. It's, I believe it's around 8%. Let me see. I'm going to actually do that calculation really quick. 8.5%. So there's only 8.5% of Bitcoin total available to buy. And we're going to talk about how important that is as we go forward here. But the key point to understand is, yes, we see the price of Bitcoin going down, but people have been buying Bitcoin off exchanges the entire bear market. So just to prove real quick, if we look at just the exchange balances, looking at all of these exchanges, all of our favorite exchanges, Binance, Coinbase, etc., there is 1.87 million Bitcoin left on exchanges. And we're going to do some fun math about with that number really soon here. So now let's think of other things as well. So we only have a certain amount of Bitcoin on exchanges, but what's the demographics of those holders? Are these people that are just going to, we call it paper hands, or are they just going to sell easily? Well, if you look at this chart, let's round up, 75% are long-term holders. So overwhelmingly, 2/3 of the market is a long-term holder already. And short-term holders is about only 13 or 14%. In exchange balances, it's less than this. We just calculated it. It's about 8.5% of the liquid supply. So there's very, very little Bitcoin right now. And a lot of people don't understand that. And it's about to get extremely lower. And I'll show you in a second. So here's another thing to think about. This is called the 5-year hodl wave, which is what percentage of wallets hold their Bitcoin for 5 years or longer. And currently 30% of the market, so 1/3 of the market, they're not only, so 75% is a long-term holder over 1 year. 5 years, people who hold it over 5 years, that's over 1/3 of the market. I mean, it's close to 1/3 of the market. They hold their Bitcoin for 5 years. So it's getting scarce, way more scarce, and people hold for a long time. They're not selling even through bear markets, these 5-year holders. And then we got to think, what's the popularity of the network? Is the network growing or contracting? Well, this is addresses with 1 or greater Bitcoin. They're actually holding a Bitcoin or more. And that amount of addresses just increased over 1 million addresses. There are 1 million wallets with over 1 Bitcoin. So the activity is getting higher and higher as well. So you have pretty much all of the fundamentals in place for something incredibly powerful, and it's not even done yet. So let's talk about what's really going on here. If we're looking at just the last 3 months, April, May, and June, we're looking at Bitcoin held by funds. Now we're starting to see institutions get into crypto because a lot of it was retail, right? So we have just in the last month, in June, we're seeing institutions buy Bitcoin like crazy. It's going up like crazy. And they now have over 848,000 Bitcoin institution on their balance sheets. So this brings me into my next point. This is one of the most critical pieces to understand in this space, is because you want to know really where the larger adoption is going to happen in crypto. And it's going to start with Bitcoin. There's currently right now a race to what's called a spot Bitcoin ETF. An ETF is an exchange traded fund. Basically, it allows an institution to buy Bitcoin and sell shares of Bitcoin like stock to companies. So companies don't have the risk of losing that Bitcoin. Now, this is going to allow companies to get into Bitcoin, pension funds, sovereign wealth funds, 401ks, all those more conservative institutions are going to start getting into Bitcoin once the spot ETF is approved. So here's where it becomes mind-blowing, is when you start to see individuals like BlackRock's Larry Fink telling us now, he was actually anti-Bitcoin before. This is the CEO of the largest asset manager in the world, BlackRock, saying that Bitcoin is an international asset. They're classifying it as an international asset and saying that cryptocurrency is like digital gold. It has never happened before, seeing big names like this talk about that. So just to put things into perspective, this is how crazy BlackRock is like a country, actually like one of the biggest countries in the world, saying that they're getting into Bitcoin. People don't understand that. The GDP of the United States is $26 trillion. BlackRock, they manage $10 trillion. That's bigger than the GDP of Japan, bigger than the GDP of Germany. Let's look at even more. So the UK, the GDP is $3 trillion. They could buy the UK 3 times over. BlackRock alone can do that. They can buy Japan twice, and they're getting into Bitcoin. And not only themselves are getting into Bitcoin, we have all of these major organizations getting into Bitcoin right now. We have ARK, BlackRock, Bitwise, VanEck, WisdomTree, Invesco and Galaxy, Fidelity, and Valkyrie, all applying for Bitcoin ETFs. Now, here's where I'm going to tie it together, where you're about to see nothing that has ever happened like this in the history of commodities ever, not even close to gold. Check this out. I did some numbers for us. So I took all of these institutions and I broke down their assets under management. ARK, 50 billion, BlackRock, 10 trillion, Bitwise, 1 billion, VanEck, 55 billion, WisdomTree, 87 billion, et cetera, et cetera. Fidelity, 4.2 trillion. If I total all of these assets under management up, you get essentially $15 trillion. Now, if anybody's a trader here, and you're thinking about how much you risk on an individual trade of your capital under management, a lot of us risk 1% or greater even. At a 0.5% allocation, a 0.5%, a lot of people don't even risk that little. At a 0.5% allocation of that number, that gives us $74 billion. Now let's move over to the supply of Bitcoin. There's only 21 million Bitcoin out there. Currently in circulation, we saw a lot of that is being held. There's 19 million. The liquid supply is 1.87 million. At a price of $30,000 per coin, that is $56 billion. So if you put these pieces together, which is a lot of people are not seeing this, they're saying cryptocurrency is risky, Bitcoin is risky. This seems pretty not risky right now, because you're seeing that these individuals, institutions, getting into the Bitcoin space, they could, with a 0.5% of an allocation, a very conservative trade, they could buy all of the Bitcoin off the exchanges easily with a 0.5% of allocation. I know very few people who really see this and get this. And if you do, this is outrageous. Never, ever in the history of time has this happened for an asset. Okay, for time's sake, I'm going to keep rolling. So the Bitcoin halving also is on the horizon. If you don't know what the Bitcoin halving is, every 4 years, the difficulty to mine Bitcoin, which is just processing through a mathematical equation, gets more difficult, and the reward for solving that equation cuts in half. So that essentially makes Bitcoin twice as scarce in itself. You can see the first halving, Bitcoin went up about 10,000%. Second halving went up 3,400%. Third halving went up 661%. So the fourth halving is happening right now. But one thing that's different about this halving is that supply. There will never before be such a shortage of supply. So there's something called supply shock. And I believe we're going to see something that the world has never seen before when it comes to supply shock. So if you're putting the pieces together, this gets pretty wild. It gets insanely wild. And I think it's awesome that we're part of this time. So this Bitcoin halving, a lot of people want to know when the next days or when it's going to happen. So in about 300 days, it looks like. Estimated date is May 8th, 2024. So buckle up. And again, if you look at these halvings, that's where the new all-time highs of Bitcoin typically happen. So where are we now? That's a big question you have to ask yourself. And I really like looking at cycle midpoints because, at least me personally, you want to know where the generational opportunities are for buying Bitcoin per market cycle. It's below the cycle midpoint. Any accumulation below the cycle midpoint, you're killing it. The market's typically not going to come back to that or even close. Again, a lot of us think that Bitcoin is super crazy risky, but if you zoom out and you understand risk and you understand potential, this gets crazy. Look at where everybody is. We're right at the top of that midpoint of the market cycle. That's a very, very opportune area statistically, technically speaking. So a lot of us think that we're late. We're actually at the most opportune time to catch this next wave. All right, let's go into something that is not Bitcoin. Let's go into the altcoin space. So something incredibly powerful just happened, and I'm going to use some legal jargon or whatever they use on their report. But pragmatic sales are in the clear. In other words, exchange trading coins are in the clear. The biggest thing in the altcoin space that was a hangup was there was a lawsuit against a major altcoin called XRP, and they were touting that coin to be a security. And everybody was afraid of accumulating altcoins because of this potentially being a security. But what has now been in the clear is that exchange traded coins are now not considered securities for the time being. So it's huge, huge news for the altcoin space. So what we're seeing here is we just had a breaking news story where the judge rules that XRP is not a security in the case against Ripple. And that's if anybody, this is what we do at Driven. We've marked up the 55-cent mark for weeks on end here. And we see once that 55-cent mark was broken, we now get a near 100% move in the XRP price. But it's not just about XRP. This is about altcoins. This is giving a lot of people the clear that it's okay to actually buy cryptocurrency on exchanges that aren't Bitcoin. So Coinbase just listed XRP. A lot of these altcoins that were considered securities are now going to be listed again on exchanges. So the final thing I'm going to bring up is really where I see the future of cryptocurrency, and a lot of other people do as well, including BlackRock. And this is the tokenized asset space. So what I want you to think of what cryptocurrency can do, cryptocurrency allows a efficient means of transferring value. We've seen this in the digital space, right? We can transfer digital art. We can make digital property. Say you have like a gun you use in a video game. I can now create an NFT and sell that to you. I can sell you the digital rights to that piece of equipment. Or it could be digital rights to a 3D model. But what tokenized assets are is doing the same thing to the physical world, which is insane because the asset space, right? That's everything. You're talking land, you're talking real estate, you're talking commodities. Cryptocurrency can increase the efficiency of actually being able to own and transfer these assets because of NFTs, because of cryptocurrencies. So it's not even myself. That same guy, the guy who's essentially managing multiple countries worth of money, is saying that the next generation for the market is tokens, is the tokenized asset space. And the tokenization of illiquid assets is expected to reach $16 trillion. So there's a report by Boston Consulting Group. I'll show you kind of the image here. Boston Consulting Group is showing the logarithmic progression of the type of assets that can be tokenized. You have tokenizing equity, which is the stock market, tokenizing investment funds, bonds, real estate, and it can be commodities as well. If you look at the commodity space, it's even bigger. You're looking at like $50 trillion. This is the biggest space possible. So before I kick it off to my next speaker, that is a huge piece, this tokenized space. It's, for example, you're going to learn a lot about this if you don't know it already, but a lot of us want to own things like, say, real estate, or you might want to own an oil field or a natural gas mine. Well, how easy is it to have a part of ownership? You need lawyers, you need contracts, you need to know people, you probably need to have a ton of money. Well, the tokenized space, you can actually make a fraction of that asset on a token. Say you have 10 tokens and you break up a house or you break up an oil field into 10 shares where you already have the contracts called smart contracts in place to where you don't need lawyers. You don't need to be, say, an accredited investor. These are extremely powerful things that can get you ahead of, basically a whole market that has not been accessible to 99% of people. So let me give you an idea of where that takes the crypto market before I kick it over to our next speaker. This is the total crypto market. The total crypto market is sitting at $1.8 trillion. Boston Consulting Group has forecasted that by 2030, it will be about $16 trillion, the tokenized asset space. So this is what we would be looking at as a forecast for our cryptocurrency market when the tokenized asset space comes along. So I know that was a ton. I just had a ton to show you guys. And if you guys like that, if you want to learn more, if you want to really understand where you're at and feel, say more confident behind something that you might be interested, like cryptocurrency, this is what Driven is for. This is what IX is for, is teaching people this stuff. Because like I said, when I got into cryptocurrency, I was just sticking my neck out there. I had a group of individuals who were just working together to see what could happen. And what we saw happen is we saw lives changed. And it's not saying that this is guaranteed that lives are changed, but I'm showing you evidence on where it can potentially go. And when I saw lives changed financially, I saw really what happened to people. For example, I was a fitness trainer. And when it came to the bills, I maybe couldn't be the best fitness trainer. I maybe couldn't have been the best husband. I maybe couldn't have been the best friend because we have stresses of finances. But what I saw was literally every individual I was with, they had their lives change when they did experience a boom in this market. And I found that they could just take a breath. I really like that. They could just take a breath finally. They could just be themselves finally. I really believe we can be our truest selves when we are financially free. So that's my mission, is to get everybody ahead of the wave. I've been behind the wave my entire life. This is the first time I truly feel that I'm ahead of the wave. And I'm here to take anybody else with us along this ride. So on that note, I'm going to kick it to our next speaker. Our next speaker is somebody incredibly near and dear to me, somebody who's believed in me. Really, I can't thank him enough for it every single day. But we're talking about the CEO of Driven Trading. I call him the Michael Jordan of trading. Every time I go on his session, he's doing things that I've never seen in this space. Trading legit products, actually showing you live on his sessions how to day trade, something he's taken years to develop, and is showing you for free. I can't tell you my entire life. I would try to find people to teach me how to trade. I actually went to college. I went to college for 5 years. I had one of the best bond portfolio management internships for 8 months. I shadowed on the floor of the CME group, and nobody decided to teach me how to trade. We have Corey right here every single day, inviting you into something he spent hundreds of thousands of dollars on and giving you that to change your life. So Corey, on that note, appreciate you tremendously. I owe you the world. Let's rock.
Well, I appreciate you, buddy. And you know me, you owe me nothing. You owe me nothing, right? Every little thing that, you just said about me there, man. I just want to know, I just want to give it back to you, brother, because I have never in my years and all the students that I've had and all of the people that I've worked with to, they say that there's a time where the student surpasses the teacher. And in cryptocurrency, man, Noah DeFreitas is, I believe, one of the highest, most informed, educated people in this entire space. And the ability to have him here teaching you guys for free on a Saturday morning is, it's life-changing. I mean, what Noah just shared with you guys, this is a absolute life-changing set of skills, set of information. I don't think that there is anybody that I look to in my entire life, and I have a huge circle of professional traders from Wall Street and CME and really all over the world. Some of those, money managers that Noah was talking about from some of the largest institutions in the world are my coaches and my mentors. But where Noah has taken himself to in the cryptocurrency space, as far as education and positioning himself at the forefront of one of the world's largest, if not the largest economic movements that's about to take place, you guys are truly blessed to be able to learn from him. And I myself am privileged to be one of his students in the cryptocurrency space. So thank you, Noah. I appreciate it. And, you guys can learn from Noah live, just like you can learn from me multiple times per week, every single week. Noah's courses, from very basic education to the most sophisticated advanced education you can possibly imagine, is available at Driven Training and IX Global for those of you who want to take your lives and your journey to the next level. I mean, that's what you just got in a 30-minute period of time. Imagine what you can get by mentoring and working with this guy consistently on a weekly basis. And Noah leads the division for us in cryptocurrency, and we're really blessed to have him. So guys, I want to talk about a different approach to cryptocurrency today. So obviously Noah really did a great job about sharing the future of cryptocurrency and where this industry is going, right? And if you can't see the future in cryptocurrency after that presentation, then maybe cryptocurrency is not for you, which is okay, because it's not for everybody. But if you can see it and you see that, hey, listen, I need to figure out how to get involved in this space, I'm going to talk to you guys today about unlocking your future in cryptocurrency through trading. I am a professional trader. I've been trading for going on just over a decade now. Spent 6-7 years in professional portfolio management, manage a private equity portfolio, very, very large one. Spent years of my life living behind my computer screen, 5 days a week, 8 hours a day, years of my life, making rich people richer. That was my life. And I, got very, very wealthy doing it. It was life-changing for myself and life-changing for a lot of other people, but it wasn't passion-filled, right? I had no real purpose in life. So I actually entered into the education space in 2020. When COVID happened, I saw all these people losing their jobs. I saw, people hurting in a very, very big way. And I also saw an education industry, people trying to learn about crypto and trading futures and trading Forex. I saw a lot of these gurus emerge in the markets, so-called gurus that were selling you the idea of making money in the financial markets, but just really selling you courses that ultimately were very harmful to people because they just didn't work. And these people actually didn't trade. So I say, what can you do if you put together a team of educators like Noah DeFreitas to run a crypto division, like myself to run a futures division, right? I had a top 1% grossing portfolio for 4 consecutive years at the largest broker in the world, right? What can you do if you put together a hand-selected team of true trading professionals, licensed trading professionals that can go out and empower the world to understand the world through the lens of the financial markets? And I think that when you look at cryptocurrency and everything that it stands for today, I'm sure every single one of you on this call, your news feed in all your social media channels has been flooded with this XRP victory, right, with the SEC. And that is just really the statement and really the nail in the coffin to what this industry serves and stands for. I want to talk to you guys a little bit today about, because I'm sure there's a lot of you out there that want to be involved in this industry. And you're like, you know what, man, after watching that presentation from Noah, I would love to just go buy 100 Bitcoin right now, right? But we don't have the type of funds to just go buy 100 Bitcoin, right? $3 million, right? You don't have that ability. So I'm going to actually show you a little bit of a different approach in how I've empowered myself in my life and thousands of people around the world, and show you a skill set and why it to really kind of shed light on why I believe it's important to learn the skill set of understanding how to actually trade a cryptocurrency, and really how to trade. Because if you learn how to trade, you actually have the ability to start off very small and accumulate very large. Okay. Spot trading cryptocurrency and even trading crypto derivatives and even going into crypto futures, you have the ability to take a very small amount of cryptocurrency and make it a very large amount of cryptocurrency over time by understanding how those markets move. It's just like if I could take $1,000 and I can show you how to compound that $1,000 at 10% a month for the next 6 years, that $1,000 would be $1 million, right? So what if we could take one Bitcoin and we can show you how to compound that one Bitcoin at 10% a month consistently every single month for the next 6 years? What would that turn into? What would that turn into, right? I'm talking about $1, right? $1,000. 10% month over month for the next 6 years is $1 million. But that's with a asset class, the dollar, that's also going down in value, right? Because of the interest rates and inflation and our GDP that's outrageous, right? All of these things. But what if you actually learn how to accumulate and grow at a 5%, 8%, 10% a month rate with an asset like Bitcoin, something that over the next 6 years is going to grow an extraordinary value, but at the same time, you're figuring out how to accumulate that with starting off with a very small amount, right? And if you look at the transformative potential that cryptocurrency holds for our future, and if you can shed a little bit of light on your life in learning how to trade, you're talking about empowering yourself to enter this space as a player, right? Like really as a player. Like learning the skill set is actually your way of becoming one of those giants without being a giant, right? Without having the funds or having institutional money to play the game or having just a disposable $1 million laid around. Understanding crypto investing is I believe probably the highest paid profession in the world and will be the most sought after skill. And you can take this so many different ways. It will be, I believe, the single most sought after skill in the entire world. So I'm actually going to go take you guys into some price charts today. And we're actually going to start off by looking at Bitcoin itself. Okay. So this is a standard price chart. For those of you who don't know what this is, I'm going to kind of walk you through the dynamics of this a little bit. If you look at a financial market or have ever looked at a financial market before, there's these things called Japanese candlesticks, right? And that's ultimately right here, right? Like this, the orange candlestick means that the market is bullish. That would be called a bullish candlestick. And the black candlestick on my chart would be a bearish candlestick. You might see them in green and red or blue and red, right? Blue for bullish, red for bearish. And on this chart right here, you'll see that I have selected the D. That means for every one of these candlesticks, it represents 1 day of time, okay? 1 day of time. So 1 day of time, 1 day of time, 1 day of time, 1 day of time. If you look at the cryptocurrency market through the lens of a trader, a professional trader, or even really an entry-level trader, right? It's not that hard to learn how to read this price chart. And I'm actually going to show you a little bit about how to do that today. The one thing that you'll understand when you learn how to trade is that the market is always moving in a direction to accomplish something. See, a lot of people just think that, supply and demand and this and that. There's a lot of that is true, right? Supply and demand. If the supply is shrinking, the demand is increasing. That's true. There's a lot of different things that move the market. There's something called market makers and dealing desks. There's retail traders. There's just a lot, right? And we're not going to unpack all of that today. But what I want you to know is no matter who's in control of the market, whether it's an institution, whether it's like the banks, the hedge funds of the world, whether it's the dealing desk, a market maker, or whether it's the retail trader, the one thing that is 100% factual, and I've been doing this for a long time, the market is always moving in a direction. So whoever's in control of that market at that time, the market is always moving in a direction for a reason. And it's moving in that direction to accomplish something, okay? It's either, there's a few things that it's doing, okay? And you can learn all about this in all of our coursework and all the stuff we're doing, but I'm going to give you a generality of it today. It's moving to a order block to increase its supply. It's filling a market imbalance, or, some people out there call it a fair value gap, right? Or a liquidity void. It's filling a gap. There's something called gaps in the market where a market takes way off really fast and it leaves like a gap of space. So it could be moving to fill a gap. The only other thing it's moving to accomplish is to take out a high or a low, which is typically a stop hunt, right? It's a liquidity hunt where people have their stop losses. The market will hunt those stop losses because there's big blocks of volume in those areas that the market can pick up liquidity from. So it's always moving in a direction to accomplish something. So if you look to the immediate structure to the left, always, it's going to tell you a story of what it's trying to accomplish. So let's just say right here, we have kind of like the last kind of bottom of the market. And I actually have to shrink my video here so I can see my chart. So we had Bitcoin come down to this price range down here in the 16,000s. Okay. And you'll notice that when it took back off, okay, it kind of launched off this area here. It left all of these spaces in the market. Okay. And these are called imbalances. An imbalance is where one of these candlesticks, they don't trade inside of each other. So I'm going to kind of draw one of these for you here real quick. So you notice how, and I'm going to zoom in so everybody can see it real nice. Do you see how the top of this candlestick is right here? And then you have this big body of this candle. And then the next candle starts here and it goes straight up. Okay. And this candle doesn't trade inside this candle, and this candle doesn't trade in this candle. That's called an imbalanced market. Markets move a lot of times to fill imbalanced markets, or that's where a lot of liquidity is left for a market to come grab. That's where it picks up volume. It costs a lot of money to move these markets, a lot, hundreds of millions of dollars, hundreds and hundreds of millions of dollars to move these markets. Here's another thing. If I'm an institution or I'm a big player in this market and I'm trying to get a $500 million position on Bitcoin, let's just say, for example, I want to get that Bitcoin at the lowest price I possibly can. So let's just say I get $200 million of my position in. You're not going to get it all in that same price, because as you're buying that position, you need people to be selling you that Bitcoin in order to be accumulating that Bitcoin. You need to find the seller. So what'll happen is, as that big order comes in, let's just say it's the first 200 million of a $500 million order, you're waiting for people to sell off those positions so you can gobble up that price. And that's why you see down here, people really liked this price point. Okay. And over here, and I can't get into the complexity of this today because we won't have too much time, but this right here, okay, down in this area is something called a order block, okay? And you have a big block of orders that come into this area. I'm going to kind of make this blue so you can see this is a bullish order block, okay? And then from this bullish order block, you can see all of this up and down. Remember, this is day, 2 days, 3 days, 4 days, 5 days, 6 days, 7 days, 8 days, 9, 10, 11, 12, 13, and so on and so on. In fact, from here to right where the market took off, that was about 64, 65 days. So 64 to 65 days, Bitcoin was accumulating in this price range. And when the market goes into this sideways movement like that, that's called an accumulation zone or a money spot, or some people call it market consolidation. But when a market's consolidating like that, it's just building up supply. It's building up for a big move. And we can see when that big move happened, that big move bursted up into the market. And if you look at where that market stopped, it stopped right here. Okay. So that was the highest point that the market made. Market moved up. Okay. And then we left this space here. That's called an imbalance. There's another imbalance from here to here. Okay. And there's another imbalance from here to here. It's an imbalance, once again, is where the candles don't trade inside of each other. And so we get to this high point and then we break out of that high point. And when we broke through that high point, what happened was we left another imbalance in the market. Okay. So once I'm going to make this orange. So the orange blocks that I'm drawing here are called market imbalances. The blue blocks are going to be called order blocks. When we break above this market and then we stop and hit that hesitation point and come back down, remember, if a market is rolling over or moving in a direction, it's moving in that direction for a reason. So what we want to do is we want to look to the immediate structure to the left, and we could say, okay, if this market comes down right now, where could be the immediate structure that this market is going to? And we can say, okay, the first thing that it's going to do is it's going to fill this imbalance. And we can see the very first move came down, we filled the imbalance, and then it took off again. Okay. When it took off again, we left another imbalance right here. Okay. And guys, I'm going to wrap a lot of this. I'm going to want you to this is going to make a lot of sense to you of why I'm showing you this here, because it's going to teach you how, with understanding how this market moves, to know exactly when to put your buys in, at what price to come into the market. And also at the same time, you could actually trade something called derivatives. You could also trade the Bitcoin futures market or micro Bitcoin futures market, and you can accumulate a substantial amount of either cash or cryptocurrency by trading the spot market like this. Know when to buy, know when to sell, know when to buy, know when to sell, or dollar cost average all of your buys to make sure that you're always buying the lows and never buying the highs. And that is for everybody who is maybe a smaller player, it's your cheat code, right? So it's like for those of you that play video games for years, right? You know, when you could type in the cheat codes to unlock all the weapons or infinite ammo or infinite health, this is your cheat code, understanding how to trade and read the price chart of these markets. Okay, so we pushed out into this imbalance and we closed it. Now, there's no more work to do right here, okay, because this has already been closed. So if the market's going to go lower again, the next thing would be to what? Take out a low or move to an order block. So here would be the low to take out, right? That's the lowest point of the market. We already filled the imbalance. The immediate structure to the left says take out the low. So here's the low. Below that would be to test this imbalance right here. And below that would be to trade into this order block. So when we make our next extension up here in this market, we can see that we left an imbalance right here. Okay, so we got to chart that. This imbalance goes away because we already filled it. So the market runs up to this point right here and we hit its first hesitation. Okay, right there. Then the market hesitates and it pulls back down. It pulls back down. The first thing we're looking for, the immediate structure to the left, is to fill the imbalance. And what happens? It comes right down, fills the imbalance, hesitates. Okay. We leave an imbalance right here to the upside. Okay. So don't forget about that one. This one is an imbalance right here, but the market doesn't go up to fill that imbalance. It keeps going lower. So what are we going to look for that market to do now? Well, the first thing is to take out this low. But below that low, we already filled the imbalance. So we would be looking to take out this low. And look at what happens. The market takes out that low precisely, tags this imbalance right here, which is a big amount of supply. And immediately we get a massive bullish move right out of that order. So for me, not only did I accumulate Bitcoin here, okay, because I understood the market was in accumulation, knew if the market was going to take off, it had things to accomplish. The first thing it needed to accomplish was this imbalance here. And then I knew it was going to take out this high. After that, I knew for sure we were going to come close this imbalance. And the next move would be to take out this high. So as I bought here and I saw that market extend and take out this high, I knew as long as we can hold our territories above these imbalances and we're only probing lows and we're not trading back down to the bottom, I need to know where my precise points to buy and accumulate more is. So you get your first accumulation here. The market makes its move. I showed you guys how we fill these imbalances and come down, but maybe you're looking for a lower price. So you have this low here. You have this low here. We have this imbalance here. As soon as this came down and hit and took out all of these lows and held, there was also something called candlestick formations, where you can have a bullish candlestick formation or a bearish candlestick formation. There's also something called price action patterns that you learn how to trade. And as soon as this candle right here happened, okay, this is called a doji candle. And this candle kind of is like an indecision candle. So we take out the low of the market here, we tag our imbalance here, and then we get this indecision. What you wait for next, and I'm going to tell you this for a reason, okay? What you wait for next is if the next bar breaks the top of that doji, it's your sign that that was your bottom. So here's your new low of the market, and you load in your orders here. And now what you're doing is every time the market pushes up and makes its next high, right, you're obviously making some profits. You mark all of these imbalances in the markets, okay? And you can see where all of your hesitation points and all of your major orders are going to come from. There's also something called, get this, there's also something called buyer's breaches, right? So you look at these big areas in the market, and I'm going to bring this together for you guys here in a second, okay? You look at these areas in the market where institutional players break major support and resistance areas. For example, as we push up into this market and then the market comes back down, you got to realize the market had a hard time getting through this point. It takes a lot of volume to push the market through a resistance area. And when you look at where that resistance area is broken, that's called a market breach. And a market breach happens when a substantial amount of liquidity comes into the market and breaches a territory, high or low. In this case, we have a buy side breach. And the whale who breached that market is right here, because you can see this is where the momentum took off to breach that territory. Now what happens is everything above this blue line, you're in buy side territory. So I've known that this market is going to be extremely bullish, and we're in our next bear run since we were at 25,000. So that's why you see it, probably a lot of your news feeds waiting for the 25,000 break, waiting for the 25,000 break. As soon as we break 25,000, the reason is because that's where the buy side breach is. So this whale right here is the same accumulator here. So when this guy puts his $200 million order in, let's say, he's not going to put in the remaining $300 million in right here because the market made this big rally and it pulled in a bunch of retail traders. He's going to get in at the lowest price he can. So he looks to the structure to the left, the imbalance gets filled, the lows get taken out. We probe into our imbalance point, which was the same imbalance point from right here. The market finds support. He loads in the remaining $300 million order and it creates the next wave of momentum. All of the retail traders come in. We break the 25,000 mark. All of the retail traders, all of the news feeds are going crazy. We broke 25,000. We broke 25,000. The reason that people understand these key areas in the market is because there are these major territories that take a lot of money to get broken. You can't just break these as a retail trader. It's institutional money that comes into the market that makes these moves possible to break through these big structured areas. But where that breach happens is a very, very key area to understand that price point of where that market breached. If that price point ever gets hit again, that's going to be the next area, the exact next area of where the market will explode from, as long as that same buyer stays engaged. And look at what happens. The market breaches up to the upside. We pull right back down to the exact same area of where the market breached, and we just got our next bullish explosion. Now, there's something forming in the Bitcoin market right now that's called a high and tight flag. It's a price action pattern, okay? With the SEC news of XRP deemed not a security, and Bitcoin's been floating around this $30,000 price point. I'm going to tell you right now, this next pattern from a technical standpoint is to break high to the upside is the next move. Now, if the market does come down at all, the only place that this market will come down to, or to potentially hunt for, which would be, I don't believe you'll ever see these crazy price points of 8,000, 16,000. I don't believe you'll see that stuff again, because all the things that needed to be accomplished in that lower zone, right, has already been accomplished. In fact, I don't think that we might ever see even 24,000 or 25,000 again, from my perspective as a professional trader and knowing how to read a price chart. Okay. What I do see is if we can retrace at all, we could possibly pull down into this area right here. But the amount of orders that are probably waiting to be picked up by massive, massive institutional money in this area is so strong. I don't think that we will ever break this blue line again to the downside. Okay. That's my perspective, right? My analysis, my perspective. So if you look at this market now, and you could say, okay, we've already actually taken out this last high. We can see it happen right here. Where is Bitcoin pegged to go? So remember, when you look to your immediate structure to the left, we can see that we have an imbalance to fill here. That takes us to 34,000. The next imbalance that fills takes us all the way up to here, which was our last seller's territory. Well, that takes us all the way to 37,695. Could we get a pullback from there? Yes, but I don't believe we'll ever pull back below that 25,000 mark. Then from there, there's really not a lot of imbalances in the market until you get all the way up to here. That takes us all the way back to 45,000. From there, what do? We look for imbalances. There's none. There's an order block here that could maybe put a short-term retracement on, but then the next move up would be to take out this high. That already takes us over 48,000. From there, we have an imbalance that could get filled at 50,000. From there, the next move would be able to take out the 52,000 high. From there, there's no imbalances until we get to 56,000 would be the next move up. So the moves that I see for the future of the bull market are substantial. They're huge jumps, because when you take out this high right here at 59,000, the next move is to 63,649. And from there, you're taking out the high. So there's a few things to accomplish, maybe 5, a couple imbalances and about 2 highs with a couple order blocks in between that can potentially hesitate the market as a wall. But if any one of these gets broken through with major institutional money flow, which is probably going to be a lot retail driven because of, more and more people being receptive to information like what Noah shared today, I'm going to tell you guys right now, the next move for Bitcoin on the, like if you just look from a price standpoint, I want to kind of show you one more thing here. If you look at a bigger time frame in Bitcoin, okay, and there's something called Fibonacci that traders use, okay, and it really kind of shows you where your market extension areas are, okay. Just the immediate extension is usually a negative 23.6%. So if we actually take Bitcoin right now, just from the bottom of the market to just that initial high that it made before it got taken out, that negative 23.6% is 79,000. Okay. If you take it to the peak, that negative 23.6% is 84,404. That's the number that every single institutional supercomputer, the $150 million trading machines that are algo buying, all of the main floor traders, that is their initial target area when their long-term portfolio holding for any asset class is your negative 23.6%. I know this, I'm an institutional trader. I have been for years. Okay. 84,000 just from the last run. If you look at the bottom of the market to the top of the market, 84,000 is the price. Now, this is our immediate extension, just the immediate extension. Now, if you look at where an equal measure move takes us, right, in the market, there's something called ABCD pattern, equal extension, equal measure moves. And I'm just giving you guys, I know you probably don't understand a lot of this stuff at all, but I want to show you something very important, okay? So the bottom of the market to the top of the market, if you look at where the order block was formed and where the market took off, an equal measure move ABCD pattern extension takes us exactly to negative 23.6%, which is 84,000. Okay. Where do I think the next move for Bitcoin is going? That's where I think it's going as a trader. Now, to be able to understand this type of stuff, okay, and to be able to look at the market through the lens, okay, of understanding how to read financial data, I believe, like I said, will be one of the most single highest paid skills in the entire world. In the entire world. If you have just the immediate price chart, that means just retail trading alone. That means just floor trading alone, the futures market, all of this stuff. If you have Bitcoin pegged for 84,000 as an initial hold target, can you imagine the amount of retail money that comes into the market as Bitcoin breaks its next high? Because you guys know that 90, probably, I know I would probably even say this is higher, but I want to say 90+% of the retail money that comes into a market like Bitcoin, it comes in at the highs. You know, it's insane. You know why? Because Travis Flaherty, who's going to be speaking next, he talks about this all the time. It's FOMO, the fear of missing out. So all of a sudden you see Bitcoin is making all-time highs. Oh my gosh, Bitcoin, Bitcoin, Bitcoin. And it's all over your newsfeed, just like everybody's buying XRP right now, right? Isn't everybody buying XRP? Let me just show you this real quick, right? I only have a couple minutes here. I'm going to pass it over to Travis, but I'm going to show you guys something. So here's XRP the other day as the news came out, okay? So look at this. So here's the ruling from the SEC the other day, and look at what happens. Boom, Bitcoin shoots from literally 46 cents to, let's see what the exact price was, 93 cents. From 46 cents to 90, it doubled. It doubled, grew 100%. in one day. In fact, probably a couple hours, right? As soon as that ruling came out, everybody bought, and look at where its floor is setting in right now. Its floor is setting in right now at 70 cents. So one ruling, and all of a sudden everybody's missing out. Why did that shoot up like this? Well, number one, the ruling. Number two, everybody that you know that has any type of inkling on cryptocurrency just bought a bunch of XRP this week. I bet you any money, right? How many people on here bought XRP this week? Right? There's 304 people in the chat. There's probably a ton of people watching on YouTube. How many people bought XRP this week? Fear of missing out. Fear of missing out, right? How many people are holding XRP waiting for this to happen? I was one of them. In fact, I forgot all my wallet passwords. That's how long I've been holding it for. So, you know what I mean? Hey, listen, I bought a bunch and then all of a sudden I was like, oh, that's just one of those wallets you forget about and don't open anymore, right? Now all of a sudden it's like, oh, shoot, triple my money. That's pretty cool, right? But that's trading, guys, right? That's trading. Understanding how to read this market through a financial lens. I'm going to tell you right now, if you know how to position yourself at the forefront of these big movements, if you know how to position yourself at the forefront of these big movements, there is no skill more powerful to the American dream or any dream in the world than learning how to read the financial data, to learning how to look at life, look at economics, all of it. The whole story is told right here in these price charts. So one of the things that I do at Driven and IX Global is I am one of the lead educators in the company. I'm the executive vice president of global trading for IX Global. You can get all of our education, every single thing, full access to Noah, full access to myself. I run a futures room 3 days a week where I trade the S&P 500 futures, NASDAQ futures, but all of the trading that we teach, we actually teach you how to trade every single market that's out there and how to read all economics and all data through the financial lens. In fact, I can even tell you a quick story before I bring on Travis. I don't know what happened during COVID. What happened, right? I don't know what happened. I don't know even anything about it, and I don't care. But what I can tell you is I saw something coming in the markets, and I can ask Noah, he was a testament to this, in November. COVID happened in like January. I saw it happening in November by understanding how to read the price charts. In November, I was telling my wife, babe, I think we're going to war. I saw all this money moving into the market in these weird bonds, and people are pulling out. We're the biggest bull run ever, right? And everybody's pulling out of what is everybody doing? Why are they dumping off these shares? Why are they moving their money into surety bonds? Like, this is weird. We're going to war. I thought we were going to war with China. That's what I thought. Right? I thought there was going to something crazy. World War III was about to happen. And then all of a sudden, COVID happened. I find it interesting that some people knew about it before it was even a thing, but that's what you get from learning how to read the financial markets. And when we're on the cusp of the digital revolution and one of the biggest cryptocurrency booms and how everything is shifting over to this digital arena, I'm going to tell you guys right now, learning how to read the financial markets and learning how to trade cryptocurrency is not only good for accumulation when you have a small amount to turn it into a big amount, or even having a big amount, turning it into more, but knowing when to get in, when to get out, right? When to get out and when to hold. A lot of the things that Travis is going to come on and talk about right now are really going to be eye-opening to you. Right at the end of Noah's talk, he was talking about the tokenization of assets. Now, the tokenization of assets, right, just by 2030, pegged to be a $16 trillion plus industry. I want you guys to understand that everything that you can look at in cryptocurrency, all the things like blockchain and tokenization and all these different things that you can learn about, right? New commodity-backed crypto, stuff like that, right? I want you guys to understand something. No matter what it is, no matter what coin it is, no matter, what type of tokenized anything it is, if it has a price chart behind it, which a lot of that stuff is going to, and you learn how to read that price chart, trust me, it will be the biggest and best investment you ever made in yourself to learn how to read financial data. Okay. So with that, I'm going to bring on Mr. Travis Flaherty. This guy's one of my friends. He's been one of my best friends for over a decade. This is one of the foremost authorities on cryptocurrency.
Hey, Corey,
yeah.
Before you do that, let's give away some X nodes.
Yeah, well, we can definitely do that. Sounds good. All right. Well,
I can't wait to hear from Travis too, but
Travis.
Oh, you got it, man. You got it. Hey, guys, I have some X nodes to give away. We've been running this contest here, and you guys have gone on to cryptowealthfest.com, and you can see the how to enter into the contest and how all this works. And if you're not quite sure, again, go to cryptowealthfest.com and read about this. We're giving away 100 X nodes, and I want to share this screen here so you guys can see. All right, you guys can all see Crypto Wealth Fest 100X nodes. Guys, we have 5 winners here to start. I'm going to put them up on the screen here for you. All right. Everybody can see this, yes? Corey, you can see that?
Yep.
Awesome, guys. Here's your 5 winners. What I want you to do is you're going to message support@ixglobal.us to claim your prize. Congratulations, guys. I'm not even going to read the names, you guys. We're going to keep them coming here. Make sure you guys get entered into the contest properly. Go to cryptowealthfest.com and make sure you have all the things checked on there. Download your wallet. If you go and you download the X or the app that you need, all the information's on the website, guys. Check it out. Congratulations. We'll get some more winners here shortly.
Yeah, don't forget, guys, cryptowealthfest.com. All the rules for engagement are on there. Make sure you guys go ahead and do all the things, and you can actually be announced as our next winners. So anyways, without further ado, Mr. Travis Flaherty, like I said, this guy's been one of my great friends for over a decade. Just like Noah, this guy is an absolute genius when it comes to cryptocurrency and understanding just really world economics and business. One of the sharpest business guys I go, multi-million-dollar entrepreneur. And, just really proud to call this guy a great friend, but he is an absolute authority in this industry. And I'm really, really blessed that we get to learn from him today. So Travis, I'm excited to learn from you, brother. The call is yours.
Hey, thank you so much, Corey. I appreciate you. Wow. So if Noah and Corey have not yet made their case about what an incredible time that it is to get involved in cryptocurrency, that we're going to keep going, I got to tell you that I believe that if you can position yourself in front of the trends, there is a tremendous amount of money that can be made. And right now, if you look at what's happening in the cryptocurrency industry as a whole, things are coming alive. Can you guys feel the crypto winter starting to thaw out? And as we go into 2024, let me tell you, I could not be more excited about where we are headed as a whole. Now, I want to start off by asking everybody a question. If you knew then what you know now about coins like Bitcoin or Ethereum, if you could go all the way back to 2009 when Bitcoin was just launching, would you have purchased it? Knowing then what you know now, would you have purchased Bitcoin when it was worth 0.0003, when it was worth $1, when it was worth $50 or $100? I think that all of us would absolutely say yes. In fact, I'm sure many of us had that story of a friend that reached out at some point and said, listen, I got to tell you about this new project called Bitcoin. It's cryptocurrency. I remember when it was about $100 a coin and I got a call about Bitcoin. And my friend says, well, listen, there's this new thing that I think that you should take a look at. It's called Bitcoin. I says, okay, well, how much are they? And in my mind at the time, no kidding, I thought that these were coins that you could buy, that they would mail you, that they would send you in the mail, that you put, you'd hold on to them. And I says, well, tell me a little bit. Are they gold? Are they silver? He says, no, they're digital. And I'm like, digital coin. Okay. Tell me a little bit more. And I says, well, how much is one of these digital coins? He says, $100. I said, okay, well, how do you get one of these Bitcoin? He says, well, you have to find somebody that's selling one. I said, okay, well, where do you spend it? He says, well, you can't really spend it. You just got to hold on to it. I says, okay, wait a second. So you want me to buy this currency that I can't hold, this coin that I can't hold. I can't really spend it. I got to find somebody that's selling it. It's almost sounding like I got to go into a back alley to do this deal. And then you want me to hold on to it. I'm like, listen, we got to talk a little bit. I think you're getting scammed. And that was about $100 per coin. Now, I'm sure that many of you have very similar stories. And of course, the rest is history. Now, while we all can't go back in time, we can now look at the trends. We can look at the cycles. We can look at some of the challenges that the industry is facing, and more specifically, the incoming solutions. And we can use these things as a guide to what projects that we should be looking at, or even, what coins or what tokens that we should be getting involved with today. Now, for example, when we say that cryptocurrency is cyclical, let's talk about Bitcoin for just a moment. So every 4 years, Bitcoin has a halving. Noah talked about it earlier today. A halving refers to an event that happens every 4 years when the block rewards for Bitcoin miners get cut in half. So what happens? This reduces the supply of the new Bitcoin by 50%. As this is simple supply and demand tokenomics. Think about it for a moment. When you have a lot of something available to you and there's not a lot of demand, what happens? The value tends to go down. Now, when you have something that's very scarce and there's a demand for it, what happens? Price goes up. Think about the housing market over the last few years, right? There was here in the United States, we had a lot of people that were moving and there was very low inventory. So what happened to the price of those homes? They shot up. Now, on the contrary, let's talk about the US dollar for a moment. Has there been a lot of US dollars that have been printed here maybe over the last 5 years? Have we had so much money in circulation that it's now put us into a situation where many of us are living in inflationary times that we've never lived through before? So again, it all comes down to understanding these cycles and understanding these trends. Now, while, past performance doesn't guarantee future results, I do believe that the best predictor of future performance is past performance. And so understanding these trends and learning some of these skills that Corey was teaching today, I believe that in school, they taught us so well how to get an education and to go get a job. They taught us how to make money, right? But did they teach you in school how to manage your money? Did they teach you how to start learning how to manage? I mean, I'm telling you, it's one thing just to make money, but it's an entirely different skill set to now learn how to manage your money. I've learned this firsthand. As we started to make some money, as we were growing up as entrepreneurs in the industry, we started to make some money. Let me tell you something. I'd be willing to bet that I can spend money faster than just about every single person that's on this presentation. Money management is a totally different skill set. So I love the fact that Corey was talking about some of these skills today. I love the fact that it's not just about making money, but managing money. But then here's the key. It's about multiplying that money. And that is what I want to talk about today. I want to talk about some different strategies. I want to talk a little bit about accumulation for a moment. And then I want to get into some of the challenges that the industry faces as a whole, but more importantly, some of the solutions that we should be looking for. And that's going to give us a really good guide as to some of the projects that we may want to get involved with. So with that, let's talk a little bit about accumulation for a moment. I was mentored by a guy who earned over $50 million in the last bull run. And this is what he said to me. He said this, Travis, the decisions that you make in a down market, the coins or the tokens that you accumulate during that same period of time can build you true wealth over the next 3 to 5 years. Now, he didn't say overnight. He didn't say this is get rich quick, but it is get rich possible. But it's going to require some patience, right? One thing about cryptocurrency that you have to understand is profits always flow from the impatient to the patient. I'll give you an example. So, right around 2015, we were involved in an Ethereum project and I started accumulating all this Ethereum. And I was excited. I think at the time, Ethereum was 70, 80, then it went up to 90, then it went up to $100 and 100, and it was doing really, really well. And then it started to skyrocket. And we're accumulating all of this Ethereum. Then all of a sudden, right around 2016, 2017, Bitcoin goes from 19,000 to 3,000 and Ethereum loses 91% of its value. We had gone through this right? Bitcoin went through a halving. We hit a new all-time high, right? It's that cycle. Every time that Bitcoin halves, historically speaking, Bitcoin hits a new all-time high. The rest of the industry follows. Everybody gets excited. Everybody starts buying. Corey talked about the FOMO for a moment. I'll never understand. It kind of blows my mind. But when Bitcoin is at 69,000, there's a line out the door to buy it. But when Bitcoin is at 16,000 earlier in January, the fear index has never been higher and nobody wanted to touch it. Isn't that an interesting, it's fascinating to me. So you think about this for a moment, you look at these cycles, 2016, 2017, all of a sudden we started to go into another crypto winter. Well, I'm holding all of this Ethereum that had lost all of its value. I'm really newer into the cryptocurrency industry at this time. I'm just kind of learning, all the lingo and the language. How many of you, when you first got into crypto, or perhaps even today, you're hearing some of these terms for the first time and you're like, what are they even talking about? I have no idea. They started talking about mining. I remember when I first started looking into mining, I mean, my grandfather was a coal miner. Mining to me is when you're in a cave somewhere and you're swinging an axe. So when I heard mining for the first time, I'm like, are these people out there mining like these physical coins? Is this how it works? So there's a learning curve in this industry, right? So here I am, and the markets crash, and I'm impatient. 3 months seems like 3 years. Am I right? When you're sitting there holding, these tokens and these coins, and you're logging in every day, and maybe money's a little bit tight, and you're thinking, should I cash it in or should I not? Is it going to go back up or is it not, right? And you're looking, and your situation financially maybe is going up and down, just like most people in the world. And then all of a sudden what happens is you get about a year in, maybe 18 months in, and I'm looking at my portfolio and I'm just like, do something, like do anything. And it's not going anywhere. So you know what I did? I sold. I sold because I needed some cash flow and I thought this is never going anywhere. I sold. And you know what? Here's the thing that you need to understand. There's always going to be somebody on the other side that's willing to buy up your losses. There's somebody that's going to be on the other side that's willing to buy up your losses. So when I sold at a low point, do you think there were some other people that were out there that understood Ethereum probably better than I, that said, you know what, this is a great time to buy. So here I was selling in a down market, and there's these other people that are buying. Well, guess what happens? Here's the rest of the story, as Paul Harvey would say, right? 2020, what happened to Ethereum? It went to over $3,000 per token. I had hundreds of Ethereum and I sold them. So I'm going to say it again. The decisions that you make in a down market, the coins that you can accumulate during that same period of time can build you true wealth over the next 3 to 5 years. You just have to understand those cycles that we're in. Bitcoin, 2009, do you understand that the original miners were getting thousands of Bitcoin every single day? Could you imagine thousands of Bitcoin every single day? They were mining up, many of them on their computers. They didn't even know what they had. Now, here's the interesting thing. It may sound exciting, but Bitcoin, that's about $2 to $3 a day at that point. It's about $2 to $3 a day. Now, these people had to go through, this was a complicated process, especially back then. So they had to figure out how to start mining, and they were jumping in early, right? These were the pioneers in the beginning stages. So they must have seen something, must have believed that this could be worth something. So they started mining. Now, the people that have the rational mind that immediately start trying to figure out the ROI, they're going to go, okay, $2 to $3 a day. This is the amount of money that it costs for the setup. As you got a little bit further along, you started getting all these mining equipment that cost $3,000, $4,000 at the time. It might last for about 12 months before it burns up or it's outdated. You had to go buy new mining equipment, right? So these people, they're all mining for a couple dollars a day. Why would they do that? You do the math. It might take you a year or 2 years to get to the point where you're even at a break-even point. Here's the question that I want to ask you. Were they mining US dollars or were they mining Bitcoin? They were mining Bitcoin. That's what you have to understand about the cryptocurrency industry. There is a difference between price and value. I'm going to say that again. There's a difference between price and value, and they are very rarely ever the same in a down market. Even in an up market, they're rarely the same. Let's say Bitcoin hits $84,000, which many of us would be very excited about, right? That's an exciting thought. But is that the value of Bitcoin? You have to think about that for a moment. Some people say that the value of Bitcoin could be $500,000 or more per coin. So who really sets the value of a coin? You do. You do, based on when you sell. And profits always flow from the impatient to the impatient. So you have to think about that, and you have to understand where we are in the markets. You have to exercise a little bit of patience and understanding. And as you become more savvy in this industry, you start to look for utility. You start to look for purpose, right? When I first got involved, everything that I would buy was based on a recommendation of a friend or chasing some coin because it was starting to go up and there was all kinds of excitement about it. And so I would jump right on and I'd buy these coins and tokens that had pictures of dogs and foxes on them that have absolutely no utility. Some of them were started as a joke. Come on, raise of hand. How many of you have been there? And you're buying these coins and these tokens that the taxi cab driver told you about because you're wanting to get lucky on a token. But over time, you start to transition and you start to become wiser, right? Experience gives us wisdom. And I can tell you that I have a lot of wisdom in this industry. And I bet many of you do too. And unfortunately, some of them are painful and pricey mistakes. But hopefully we learn from those mistakes. And so today, you're learning from Noah, you're learning from Corey. Hopefully I'm sharing some value as well so that we can help you to avoid the pitfalls and trial and error that a lot of people go through in this industry. Another reason that today is such a good time to get involved in crypto is because of the whole mistrust of the banking system in the world right now. About a year ago, I really started feeling uncertain about what was going economically. I was watching the housing market go through the roof. Rates are going up. prices of houses are getting to astronomical numbers. You know, I live here in Phoenix right now, super hot today, by the way, 118 degrees. Anybody want to come visit? Live here in Phoenix. The housing market is ridiculous. It doesn't even make sense. It's not even logical anymore. Do you realize that the average household income in the United States right now is right around $57,000 combined household income? Do you realize that it's taking about 45% of that average household income to even make the average mortgage payment right now? It has never been that high. Never been that high. The rising cost of goods across the board. You know, I tell the story on my presentations all the time. The other day, I ordered a sandwich, one of my favorite sandwich shops, Jimmy John's. They should give me some, I should get a referral fee for how many times I talk about Jimmy John's. I ordered a 6-inch sandwich from Jimmy John's. And you know what? I grabbed that and a bag of chips. It was $19. $19. The rising cost of everything across the good. Now, here's the question. Are salaries keeping up with the rising cost of goods? They're not. So what happens when you've got this situation where rising costs, salaries aren't keeping up? What happens? People start going into debt. They go into debt. And here's the thing, we become slaves to that debt, right? Credit card debt starts to inch up. It's not intentional. It's just there's not as much cash flow. Cash isn't going as far. So now consumer debt starts to climb. You realize that our consumer debt right now is as high as it was during the Great Depression. Guys, at some point, something has to give. So you look at the banking system as a whole, we've had more banks close in 2023 than ever before in the history of time. Banks are merging up like crazy. So what? So I'm seeing all of this happen a year ago, and I'm thinking, you know what? I don't love leaving my money sitting in a bank right now. I don't love the fact that banks are telling me how much money that I can now withdraw. Do you realize that in some states in here right now, some states are requiring you to submit an invoice if you want to withdraw more than $3,000, and you have to tell them what you want to spend the money on. And they have up to a week to give you your money. They also can decline what you're spending, they decline giving you the money depending on what you're spending the money for. Do you realize that right now there are banks that if they know that you are sending money to a cryptocurrency exchange, they will completely close your account. No questions asked. It's crazy what's going on. This is your money. This is your money. And not only that, the banks, they are getting wealthier and wealthier on our money, right? We go and we deposit the money into the bank. And I think for a long period of time, many of us thought that when we walked in with $1,000 and we put it into the bank, that person took that $1,000 and they went somewhere into the back room and they put it into a vault and a safe and the money just sat there. Guys, it doesn't work that way. The fractional banking reserve system, they no longer require them to have these deposits and hold anymore. I think they have to hold 2% in reserve. So that means they're taking your money that you're depositing and they're investing it. And you know what's happening? They're getting wealthier and wealthier and wealthier at your expense because they're wrecking your savings at the same time. How? Because they're working with the Federal Reserve. And what's the Federal Reserve and the banking system doing? They just keep printing money. They just keep printing money. If you go look up the word that's used by the Federal Reserve as their approach to whether or not to print the dollar, it is flexible. That's their word. We're flexible. We're flexible. By the way, is the Federal Reserve even a federal institution, or is it a privately owned institution? It's a good question to ask. So I'm looking at all of these things that are happening, and I'm saying, hey, I'm not real happy with what I see. I don't want my money sitting in the bank because I refer to that as lazy money, right? If you've got money sitting in the bank right now, you are losing money. So we made a major shift. We decided to become the bank, and that's what I want to recommend that every single one of you do here on this presentation today. Instead of giving them the money, I'm taking my money and I'm putting it to work. And I'm now building my wealth and I'm building my fortune. And let me tell you something, the day and age of the banks being able to utilize your money to go build fortunes at your expense, those days are numbered because more and more people are awakening every single day to what is happening in the world. And that is why the banks are scared, right? They started with the FUD tactics years ago, right? They were all out there saying, JP Morgan, just a few years ago, they said, hey, listen, we don't believe in crypto. They called an emergency meeting for all of their shareholders, their top investors, and they said, do not buy cryptocurrency. It's not backed by anything. We don't support it. We're warning you, don't get involved, right? Anytime that cryptocurrency drops and we go into a kind of a crypto winter, what does the media do? They spread all kinds of fear and uncertainty and doubt. I told you so. The I told you so people, man, they love to come out every single time that crypto goes backwards a little bit. Oh, I told you it wasn't backed by anything. I told you the balloon was going to bust. This is going to be bigger than the dot-com bubble in 2000. And the media just spreads all of this fear. That's why nobody wanted to buy Bitcoin when it was at 16,000. Then you've got people like us that are out here saying, listen, the decisions that you make in a down market, the coins that you accumulate right now, not when it's at 69,000, can build you true wealth over the next few years. So the key is you've got to take control of your financial future. So listen, I'm a huge fan of digital currency because I believe in decentralization. But I'm not oblivious to the fact that it doesn't have some challenges. There are some challenges, right? I mean, it's in its infancy. It's still in its infancy. Do you realize that the Mint Act was formed, right, in 1792, which established the currency of the United States? So from an actual currency standpoint, it's only 10 years old. And while these banks don't want to acknowledge that it's a true currency, like JP Morgan, for example, a couple of years ago, what are they doing now? Don't listen to what they say, look at what they're doing. JP Morgan is now talking about putting trillions of dollars into the tokenization of assets. Do yourself a favor after this presentation, just Google JP Morgan tokenization of assets and read about it. What's Goldman Sachs doing? They were warning people about cryptocurrency just a few years ago. I mean, guys, we're talking 24 months ago. They're buying up exchanges. You see, the banks, there's a war between the banking system and cryptocurrency right now. They're trying to make it really, really hard for you to be able to go buy crypto. Why? Because every time that you take $1 out of your account and go buy crypto with it, they're losing $10. So they are doing everything that they can to prevent you from coming off of their platforms. So, when we talk about cryptocurrency, it's still in its infancy. I consider all of us that are enthusiasts that are here pioneers. It's the pioneers that they write about in history books, right? But let's talk about some of these challenges. So volatility. Volatility, is that a challenge? It is a challenge. Historically speaking, if you go back and you look at these cycles, if you're on the wrong side of the cycle like I was, and you need cash and you're buying on the way up, and then all of a sudden it starts to go down and you're sitting in these tokens and you don't want to sell because you don't want to take a loss, is that a problem? Is it a problem that it could take 3 years, 2 to 3 years, or even 4 years to come out of that crypto winter? Absolutely. And that keeps a lot of people out because every time that it goes down, the media does their smear campaigns, right? Funded by the banking system, same people, media and the banking system, and all the elites, right? So that's a big problem. What about complication? Is it complicated? Anybody ever try to go buy tokens on PancakeSwap? Like, it's still not easy, right? MetaMask wallet. I got to go over to this wallet, to buy this currency. I got to go over here. I mean, it's not easy. So it's still complicated even at this stage. But it's not impossible. You just have to learn it. The third thing here is again, we've talked a little bit about this, the war on crypto right now. Banks don't want you leaving their platform. That's a challenge that we're definitely facing as a whole. But I think that here's the key. Their solution is we're going to come up with our own digital, currency from the Federal Reserve. We're getting away. Decentralization was to get away from the banks. I don't know about you, but just say no. I don't want anything to do with their token or their digital currency. They're the ones that have created this mess in the first place. Nobody wants to be a part of that. We've talked about FUD, but probably one of the biggest challenges that I see, meme coins, fake meme coins, pump and dumps, rug pulls. There's thousands and thousands of these projects out there. I don't even know how many coins. It's probably over 10,000 tokens or coins now. Somebody probably could put that into the chat. And I read somewhere once that it was estimated that as much as 98% of these tokens and coins that are out there have no intrinsic value whatsoever. I mean, some of these coins and tokens were started as a joke. And then the Reddit group started getting behind them, trying to pump them up, and they just start going through the roof. Let me tell you something. A true asset should not fluctuate 80 to 90% just because Elon Musk tweets about it. Newsflash, right? These are manipulation is a problem in the cryptocurrency industry. So these are all some challenges. So with that being said, we've still had massive adoption over the last decade. Massive adoption. You realize 4% of the current population has a cryptocurrency wallet right now? 4%. That's huge. It's projected to grow to 10% over the course of the next couple of years. As these wallets keep coming out that allow people that don't have access to banks in all of these countries around the world to be able to easily get into these wallets, you're going to see the number grow significantly over the next few years, right? We talked about a success principle early. Figure out where people are going and get there faster. But if you want to build legacy wealth, figure out where people are going, get there faster, and provide real world solutions to some of the biggest challenges that we face today. You know, these meme coins and these pump and dumps. So here's what happens. Let's say that we wanted to start a project. And so Noah, myself, Corey, Joe, we're going to start our own token. We're going to start our own coin. It's the Awaken coin, right? We're excited about it. So we're going to go launch this. And here's the thing, because we're launching it, Noah, you get 10 million. Gary, you get 10 million too, because you're doing a great job today. You know, all of us hosts, we're going to get 10 million tokens. And we're just going to hang on to those. And then what we're going to do is we're going to go give 10 million tokens to a few different celebrities, and we're going to let them go tweet about it. And they're going to garner a little bit of attention. And then pretty soon people are going to start to buy. And then more people are buying. And pretty soon when you have a lot of people that are buying, what happens to the price? The price starts to go up. Well, what happens then? One of the most powerful emotions in the world kicks in. FOMO kicks in, right? Fear of missing out jacks that price up even more. And we're over here just celebrating, high-fiving. And pretty soon we see it start to hit its peak. So now we all collectively dump all of our tokens and sell. What happens at that point? I've been there. It crashes, right? And the rest of us are all sitting here going, what just happened? This thing was on fire. I bought it at 69,000 and it's at 16,000. Now, at least Bitcoin, they've got a deflationary mechanism. They have a halving, right? A supply and demand situation here where they're removing half of the tokens out of the supply. They're smart. They've got a finite amount of tokens that are ever going to be minted, and they're removing half of them every 4 years, right? That's deflationary. That's the opposite of inflation. But most of the projects that are out there, you know, there was one in the news recently. I won't say the name of it, but this particular project, it mooned. Same scenario. It went shot through the roof in a matter of 24 hours. Nobody had ever heard of it before. It rhymes with Hepe. And so, you know, everybody was all excited about it for about 24 hours. People started buying it. It kept going up and up and up. And then all of a sudden, the major whales sold and it crashed. And now everybody's sitting here going, what am I going to do with these tokens and coins? Do you realize that there are tons of projects that are out there, ICOs, these other projects that are out there that, you know, they start these projects and they talk about what they're going to do when we get on the blockchain, when we get on the blockchain, when we finish our blockchain, and they'll issue all these tokens that you can go and buy, but they have zero liquidity. Nobody that'll buy them. How many of you have been stuck with tokens before that you can't even go sell? So these are problems in the industry. Now, I talk about this because if we understand the problems, then you can start to look for the solutions. You see, what's going to move? I find myself asking this question. If the number is going to go from 4% to 10% or whatever the number is going to be, but we know that it's growing, what's going to be the catalyst? That's the question we need to be asking ourselves. What is going to be the catalyst? Well, the answer is very simple. We're moving away from hype, speculation, and manipulation, and we're moving to substance. We're moving to tangibility. That is why the tokenization of assets is projected to be worth, as Noah said, $50 trillion. That's what I'm focused on. That's what's interesting to me. I want to give you a real world example here, and then we're going to wrap up. So, you know, here we have some different projects that I am a part of. Many of our partners are a part of. And I want to give you an example of difference between a rug pull and something that's backed by an asset. How does it work? So we've got some different projects that are up here, and I'm just going to use a few of these as an example. So I'm going to take a project that's backed by natural gas that we're all involved with, many of us. So this particular project, or any of them, aluminum or DCM or drip or B, so these projects, what happens is you have revenue that comes in from the asset partners, right? So if there's oil sales that are happening, there's royalties that come in. If there's natural gas being sold, royalties come in. Royalties are better than profits. Why? Because royalties get paid first, profits get paid last. So they come into a trust. This trust is governed by a smart contract, which means it can't be manipulated. It's run and managed by third parties that essentially market managers that have one purpose with that revenue that comes in from the royalties. They buy up tokens every month and they send them to a burn wallet. Now, what does that mean? It means that they're constantly, every month, they're removing tokens from circulation, not every 4 years, every month. So now if you have a deflationary mechanism that's happening every month, could that lead to a reduction of volatility? Could that lead to a reduction of volatility? Doesn't mean it's going to eliminate it. This is a market. Markets fluctuate. People are selling, it's going to go down. People are buying, it's going to go up. But could it reduce volatility and help us not go into 4-year winters? You bet it can. So you've got this trust that's sitting here with all of this revenue, and then you've got the miners, right? These are the guys that are helping bring the tokens and coins into circulation. There's only a couple of ways that coins can come into circulation. Either one, ICO, we go out and we issue tokens and coins. I don't like ICOs. You know, you might hear 1 in 1,000 of somebody who got rich and got lucky. I don't like ICOs because you can go out and just issue all these tokens, and these people that the tokens were issued to, just like the example I gave, can sell and crash the token. So I'm not a big fan of ICOs, or they can come through mining. The miners that are validating transactions on the blockchain are helping to create those tokens that are coming into circulation, right? I'm a big miner. I love mining. I own over 100 mining nodes. Why? Because I want to be the ATM. What do I mean by that? Could you imagine if you were, you know, in the 80s when ATMs were becoming really popular and you had an opportunity to be able to go out and place ATMs all over the place, gas stations, grocery stores. And every time that somebody came into one of those ATMs and they put their card in, we have to pay a fee, right? $3.95. If you're in Vegas, it's like $29.95. But you owned the ATM, so you got that fee. And you had these ATMs all over the place. And it was just producing residual income, passive income, right? Cash flow that you're not trading your time and dollars for. Would that have been something that you would have been interested in? See, mining is very similar because all we're doing is we're buying the hardware or the software, in this case, it's software that is helping to enforce the protocol on the blockchain. And in return, we get rewards, tokens, right? So here's what, so these guys, these miners are happy because they're getting paid 24 hours a day, 7 days a week, these rewards without having to do anything. They don't have to recruit anybody. They don't have to go build a business. They're just getting these tokens that are coming in every single day. I love it. I love opening my app every day and looking at them real time, just coming in, and I can cash them in anytime that I want. But here's the example that and this is really the point that I want to hammer home today when we come to the tokenization of assets. So the coin that I talked about before, you know, we talked about what happened. You know, the price went up. A lot of people buy on the way up. It crashes and burns. And they're sitting there with tokens that are not ever coming back. So we have a project called BEV. It's one of our asset-backed projects. It's backed by the $300+ billion beverage industry. This was such a popular project. At the time, it was one of our fastest selling out projects. The token performed exceptionally well. We hit the exchange, and literally it had gone up so much that people, there were a lot of paper hands out there, said, oh my gosh, there's a lot of money here. I'm going to sell. And so within a matter of a couple of hours, I think we had hundreds of thousands of dollars come, people selling. Within 8 hours, I think it was over $1 million. Well, what happens anytime you have a massive amount of selling, more selling than buying? What happens to price? Price goes down. When you have that much selling, price goes way down. So this is a Friday night, 5 o'clock, 6 o'clock in the evening. I still remember this. Price plummets 80 to 90%. Now you're saying, wait a second, I thought that assets help to reduce the volatility. Let me tell you the rest of the story. So the price goes down 80 to 90% in that period of time. People are just selling like crazy. Well, as the price started dropping, what happened? Fear. Somebody said it earlier in the chat, fear kicked in, right? So people are like, oh my gosh, I got to sell before this thing goes to zero. Well, it didn't just affect that one project. It started to affect all the other projects. People were scared. They're like, I got to start selling. So now we're watching the other projects come down 20 to 30% in value. I started getting calls. I remember I was on my way on a date night, Friday night with my wife. Phone starts ringing. What's going on? What's going on? First, I'm like, oh, on date night, not going to answer. But then I kept getting phone calls. So I talked to Joe, who I'm going to introduce here in just a moment. And Joe said these words to me, and I shared this with everybody who was calling me, but he says, do you trust the trust? I said, absolutely. Do you trust the trust? He says, if you trust the trust, then what should you be doing right now? Because see, think about this for a moment. If the price went all the way down and you've got this trust with millions of dollars sitting here, and think about what they're doing. Their number one objective is to buy token at its lowest possible price point so that they can burn as many tokens as possible. So they're sitting back waiting, watching all of these people sell. And they're going to wait until it stops, until it gets to its lowest price. And then they're going to infuse millions of dollars by buying those tokens out of the ecosystem. Now, by the way, plenty of liquidity to people that sold. They all got their money. Congratulations. Thank you. Many of us bought up your losses. But here's the thing. So it got down here. The trust started buying. Now, by the way, the moment that I had that moment of clarity with Joe, when Joe said, trust the trust, we need shirts that say trust the trust, by the way. I could not pull over fast enough to buy the dip. I couldn't pull over fast enough. I was mad at myself because I didn't have enough USDT on hand to be able to have access to buy as much as I wanted. So many of the wiser individuals that have been through this started buying because they knew what the trust was going to do. So the trust stepped in and bought. And within 24 hours, the values were back. I have friends that put $4,000 or $5,000 into coins that were worth over $130,000 within 24 hours. My question to you is this. With the coin that rhymes with Hepe, when it crashed, do they have a trust that's going to step in and buy up those tokens to restore the value? They don't. If you understand what I just shared, you understand the power of tokenization of assets. You understand why we have been pioneering the tokenization of assets for the last year here within our community, and ultimately why the company that we're affiliated with has been involved with this for the last 3 or 4 years. You know, you've got JP Morgan talking about just getting involved in the tokenization of assets. We've been doing this for years. So for us, when I talk about the challenges, I'm looking for the substance and I'm looking for the solutions. Tokenization of assets gives me peace of mind. Why? Because there's something that's actually behind it. There's something that helps to reduce the volatility so that I don't have to sit there for 4 years, hopefully waiting for my tokens to not come back. And it provides huge upside potential, right? Remember the words that my mentor shared, that I shared earlier on. Decisions you make in a down market, tokens you accumulate, can build you true wealth over the next few years. Okay, so in closing, I just want to say this. By getting involved now, I believe there's no guarantees, right? There's no guarantees in anything in life. There's risk in anything that you do. There's risk in leaving your money in the bank right now. There's risk in everything. But by getting involved now, individuals can ride the wave of innovation. They can potentially benefit from the future advancements, even from decisions like yesterday that were made by XRP that literally provided clarity for the industry in a huge, huge way by ruling that XRP was a digital asset. So crypto accumulation in a down market can be a wise strategy for wealth building over time. The crypto industry's momentum combined with the potential for value appreciation and the advantages of cryptocurrencies as a store of value. We didn't even get into that, right? You buy Bitcoin 10 years ago, what's it worth today? What was the dollar worth 10 years ago? What's it worth today? Big difference, right? Remember, investing in cryptocurrency carries risks, so it's essential to conduct thorough research, seek professional advice, educate yourself, look for the utility, look for the solutions. Don't look for the hype. Run from the hype, look for the solutions. So with that, thank you guys so much. I appreciate it. It is my pleasure now. Gary,
Hey, Travis.
Are we giving away some more fun stuff?
We're going to give away some stuff here before you bring Joe. I'll let you introduce Joe. Guys, real quick here, I'm going to share screen. We've got 5 more micro nodes to give away. And, before I do that, just one thing to just kind of piggyback off what you're saying, Travis. My jiu-jitsu instructor says that knowledge destroys fear, right? We fear the thing that we don't understand. And what I'm hearing from you and from Noah and from Corey, is just understanding. You guys understand this better than the average person. And so you don't fear it, you're holding. You don't fear it, you're investing. You don't hold it, you're leaning into it, right? You don't fear the thing because you understand it better than the average person. And so this is what we're after, guys, is knowledge destroys fear. And let's see. Here we go. All right, guys, I've got 5 more to give away. The first 5, I want to make one correction here, guys. support@driventrading.com. Make sure you message this email address here and we'll get you guys your micro nodes. The next 5, congratulations to you 5. I will post them in the chat here also, so you guys have that, but make sure you guys just message support@driventrading.com and we will get you your micro nodes delivered to your wallet. Guys, it's not too late. Make sure you guys download your Debtbox wallet that you have, right, to make sure you guys get access to this and follow through with everything on cryptowealthfest.com. You can find all the instructions for how to do this. We're still going to be giving away some more here. All right.
Thank you so much. Appreciate you, Gary. Congratulations, by the way, to those of you that are getting those micronotes. We still have some more to give away, right, Gary? People don't want to go
That's right.
anywhere.
Yep, we've got more coming.
All right. Well, it's my pleasure to be able to introduce you to the man of the hour here. This individual is not only a friend, he's a mentor to me. He's somebody that I look up to and admire and respect. I've known him since around that time when I first kind of got involved in cryptocurrency back in the 2015-16 days. And I've watched him and I've watched his growth. I've watched his leadership and his wisdom as it relates to, making money, managing money, and multiplying money. Started a company a few years ago that's centered around this particular area. Many of you know, IX Global. They did $206 million in revenue focused around education and leadership development last year, and are the #1 momentum company in the direct selling industry today. And he is just a wealth of knowledge. He's also a veteran, served in our military 3 times, 3 tours overseas, and just, can't say enough good things about him. And so with that, Mr. Joe Martinez, the time is yours. I've got my notepad and I'm ready to take some notes, my friend.
All right. Thank you guys so much, Travis. I appreciate that. And it's wonderful to be here. And, I've been listening to Travis and Corey and Noah and Gary as well. Thank you so much for, hosting and kind of pulling everything together. What Gary said, about knowledge dissipating fear, it just eliminates that fear. I think that's the one thing that people need to understand when we're talking about entrepreneurship, when we're talking about cryptocurrency, is when you start to understand your business or your cryptocurrency or your blockchain technology or your node or whatever you're wanting to get involved in. When you start to understand it, it brings more and more value and it gives you more and more excitement. So today, guys, I got a lot of amazing things to be able to talk about. I hope it really fits in with what Travis and was talking about, and Noah was talking about, and Corey was talking about. I hope you guys are seeing the value in the system. Really quickly, guys, for everybody that's on the Zoom right now listening in and on the YouTube, I want you guys to do me a favor. I'm going to be talking for the next 15 minutes or so. I'm not going to talk very long. But I would like for you to send out any additional invitations to anybody in your communities, anybody on your social media, anybody in your WhatsApp broadcast channels. If you could just send out the link to the YouTube channel or the link to the Zoom to join in, because I can absolutely guarantee you the information that I am going to share with you today is going to impact your life, specifically your financial life. And at the very end, I have a very special giveaway that I hope everybody within our community and outside of our community can also participate in. So I'm going to give it a couple, minutes here. I want you guys to get back focused to what we're talking about. But if you could send out the link, send out the Zoom link, send out the WhatsApp link. Let's get as many people as we can, prospects, guests, whatever. If you're involved in IX, no, it doesn't matter. Just get as many people as you can on here and listen in at the same time. So what I want to talk about, and I have a presentation prepped if we need to go that way. I want to talk about kind of where we are at in the world right now. For me, everything is about creating legacy. Okay. A lot of people, they might hear that word inside what we do as entrepreneurs or in investments or in just in the world in general. But what does it mean to leave a legacy? We hear people talk about legacy companies, legacy leadership, right? Honestly, the only thing that we were born with is ourselves. The only thing we're going to leave this world with is ourselves. Everything else is going to be left behind. So when I talk about legacy, it's what we can leave behind for this world, for our children, for our future generations. And I start to see, and I start to look at history a little bit, right? Past performance isn't indicative of future results, as we say in the financial markets. But if you start to study history, you start to study, government history, empires in the past, you start to realize that there hasn't been one that's lasted, thousands. There's not going to be an empire that lasts forever, right? As we know it. In history, there hasn't been that. And so when you start to look at the state of the world, And me as a Marine, I start to look at things hopefully in a different lens, hopefully not too negative for some of you people, but I start to look at the battles that our world has had, okay? I start to look at the battles that our society is having. What are the struggles our families are dealing with? What are the struggles that our countries are dealing with? What are the struggles that the world is dealing with? And you start to evaluate some of these different wars, if you will, and we can go back to, the 1900s and, World War I, World War II. What were those fought on, right? Some of them could talk about power. It could talk about, the political side of things on, political differences. We could talk on ideology differences. There's so many things that we can talk about when we're talking about war, right? And why am I talking about war on a cryptocurrency Wealth Fest webinar? Well, you have to look at the reasons for these wars. What is, like Corey was talking about, when he was evaluating the financial market, he could very easily identify that there is going to be something, a world event happening. Money is moving and shifting to certain in and out of certain assets to get prepared for what is going on. And I can tell you right now, guys, we've gone through the world wars. We've gone through through the nuclear challenge with the Cold War. We've gone through political wars, in Vietnam, in Korea, in different regimes. We've had the war on drugs. Most recently, we had the war on terrorism. Okay. Right now, where we are at in our time and space in this world, we are in what I call the currency war. The war on our currency, the war on currency and overall, right? Travis started to talk about centralization versus decentralization. We have central bank digital currencies that are coming in play here very rapidly around the world. And that's just going to take away a lot of people's privacy. It's going to take away your flexibility. It is going to limit us as people, okay? And that is my belief. That's going to limit us as people. So what I want to do here really quickly, guys, I'm going to just share my screen. So just give me 1 second while I get set up here. Like I said, I talk about legacy a lot because to me, it's about how do we leave a legacy for our future generations. You guys hear me talk about that if you heard me talk. So the state of the world, where we are at right now, like I said, we are right now in 2023, and I believe this war started a couple years ago, the currency war, right? It doesn't matter if you're in the US or if you're in India or if you're in Brazil or if you're in South America or if you're in Europe or South Africa, wherever you are at around the world, this war is going to affect every single person. Now, how did we get here? How did we get to this currency war? Well, it all started back in the 1900s, 1910. There was an event that happened here in the US on Jekyll Island, and it was the formation, okay, the formation of the Federal Reserve, the central banking system. Now, this central banking system was, like Travis said, set up by the elite, okay, set up by the wealthy at the time. And they have created legacy brand names in the financial market. JP Morgan Chase, okay? JP Morgan bailed out about 90% of the banks back in 1907, okay? JP Morgan personally, from his wallet, from his pocketbook, from his bank account, took money out and bailed out all of the smaller banks in 1907 when they had to run on the banks. He personally did that. Then, through him and his associates, they led the creation of the Federal Reserve, and that went into effect in 1913 with the Federal Reserve Act of 1913. Now, fast forward a little bit, 1944, you have the Bretton Woods Agreement. What is the Bretton Woods Agreement? Well, this created some very important financial institutions and some key policies for our current currencies that we have, okay? Number one, it took gold and it pegged it to the US dollar, okay? Then what they did is they took the USD, US dollar, and they created a foreign exchange market, okay? A lot of us have heard about Forex before. Well, this is the formation. This is the initial stages of how these markets were created. Gold to the US dollar, which was supposed to be a world currency, a reserve currency, okay? Now you have all the other foreign currencies around the world that were going to be pegged. And the idea with this is to be able to help. I believe it started with good intentions, okay? It started with good intentions to be able to help develop nations around the world, to help bring up our allies, to help rebuild Europe after the world wars, okay? And it's done. It did that. But what it's also done is it's created so much wealth for the few, okay? And it's created so much debt for the middle class, and it's pushed those in poverty deeper into poverty. So gold to USD as a world reserve currency creates the Forex market. Bretton Woods Agreement also creates two institutions, IMF, the International Monetary Fund, and the World Bank. Okay. And there's a few names in here. There's a few family names that are put into this. Now, let's talk about this here really quickly. I was talking about gold and the US dollar. Let's talk about the evolution of currency. Well, first and foremost, we have precious metals, right? These precious metals were given us to us by, by Mother Nature, by, our higher power, by God, whatever it may be. So we look at precious metals, precious metal being gold, okay? And I like to say gold is God's money. That's the phrase I use. Gold is God's money because it was put here on this earth for us to be able to use it in some form. Whether we're using it in the correct form as a currency or not, we don't know right now. First, precious metals. Second, we have fiat currencies. Now, these fiat currencies, some people know, some people don't know. Fiat currencies, the meaning of fiat, first and foremost, is a literal translation, because I said so. Because I said so. So a fiat currency is your government's money, right? That's your dollar bill, that's your rupee, that's your peso, that's your euro, that's your British pound, okay? Those are your fiat currencies. That is essentially backed by the policies that your government is creating, your national government, okay? Sometimes we have good administrations, sometimes we have bad administrations, sometimes we have good chairmen on the Fed, sometimes we have bad. There's different situations that are going to affect our fiat currencies, as we know, okay? As Travis was talking about, the US dollar has lost about 90% of its value over the last 50 years, okay? Since it was taken off the gold standard in 1971. Now, so the Bretton Woods Agreement established the gold standard. Let's talk about that really quick. The gold standard essentially said, hey, the dollar is pegged to this much gold. That is the gold standard. In 1971, President Richard Nixon took us off the gold standard, okay, and put us onto what's called the petrodollar. That's another lesson. The next evolution of cryptocurrency that we had got published first in 2008, okay, of currency is crypto. That evolution was published in a manifesto by an unknown individual or group of individuals known as Satoshi Nakamoto, okay? We still don't know who this is. They created Bitcoin. They published the white paper on Bitcoin. They helped on the initial development of Bitcoin. And the identity of this person or this group of people is still under question, is still unknown. But they have revolutionized the currency market. So if you look at these three things right here, we have God's money, we have our government's money, and I like to say crypto is the people's money. Crypto gives the power back to us as people. It gives us the decentralization. And we're going to talk about some of the things that it offers us. Because when we start to look at fiat, right, if we go and study the fiat generation, okay, we start to look at events like the formation of the central banking system, as we know it here in the US, the Federal Reserve. There's nothing federal about it. It is a cartel of banks. It is a good old boys club that runs the Federal Reserve. Bretton Woods Agreement, setting the gold standard, us getting taken off. All of these things have affected our value on our currency. We used to be able to take $20 when I was younger, 15, 20 years ago, and go grocery shopping for the entire week with $20. As Travis just said, he went to Jimmy John's and he got a sandwich and a bag of chips. So the store of value of our current fiat currencies is non-existent. Now we look at the other side of things, talk about Bitcoin, look back 10, 15 years at the formation of Bitcoin, okay? There's a famous event in Bitcoin. It was the 10,000 Bitcoin pizza. Let's say that was about 10 years ago. An individual paid or gave 10,000 Bitcoin for 2 large Papa John pizzas. Okay, so 10 years ago, 10,000 Bitcoins was equal to 2 Papa John pizzas, maybe $50. Well, guess what? Today, 1 Bitcoin could buy you a, mid-size, full-size sedan car. It could be a down payment on a home. So the store of value of Bitcoin, even through all its volatility, the store of value of crypto or Bitcoins is bullish compared to fiat currencies that is bearish. Okay, if you don't know those terms, bullish just means that it's in an upward trajectory, bearish means that it's in the downward trajectory. So where do you want to put your future legacy? In something that is going down in value or in something that is going up in value? Okay, so that takes us through where we're at, the evolution of currencies. Why crypto is important, why we were talking about crypto is because of 3 key points, okay? These 3 key points in my mind is number 1, store of value, okay? Where are you going to put your money, okay? Where are you going to put your hard-earned money, whether it's dollars or, rupees or other cryptos? Where are you going to put your accumulation of wealth? In what asset are you going to put it in? Well, back in 1944, when they had the Bretton Woods Agreement, if you would have put it in the US dollar, that was backed by gold. So you could feel like, hey, I got something that is, my wealth is backed by gold. Okay. Well, you do that now, you put in the US dollar. We lost about 9, 10, maybe 15% to inflation over the last 18 months. So that's not a good store of value. What you want to identify are opportunities in the cryptocurrency market, in the cryptocurrency industry that have good stores of value. You want to identify different cryptocurrencies like Bitcoin or Ethereum or XRP, or myself, I heavily into our debt projects, NatG, BGLD, DRIP, DCM, because I believe in these projects. I understand where they're going, okay? And there's no outside force that can come in and take that away. As Travis was talking about, it's trust the trust. The thing about DeFi, the thing about cryptocurrency, it's decentralized finance. And the blockchain gives us transparency to see that there is no manipulation going on. Now, the challenges with cryptocurrency and DeFi is it's so new that the markets are not as big as the current financial markets or the traditional financial markets, meaning mid-size to bigger, what we call whales or investors, can move markets significantly. And if you don't have an investment mindset, if you don't have a long-term mindset, if you don't have that store of value mindset, you will get pushed out of the market because of fear. Okay, so understanding how your emotions are going to also create your legacy. It's kind of weird if you think about it, right? Your emotions, your feelings are going to drive you to make decisions, good or bad, that are going to help you create your legacy for your children and so on and so forth in the future. Now, what we've done in society, and this is a quote, I wanted to share this a minute ago, but this is a quote by one of the members of the Rothschild family, and it says, "Give me control of a nation's money supply, and I don't care who makes its laws." So we talked about the Fed. We talked about the central reserve banking system, okay, the central banking system. All of these things have put power into the few's hand, into the elite's hands. And what crypto does, what it allows us to do is to take our power back, allows us to store it in a currency that is potentially bearish, meaning it's going to increase in value. You can do that. You can exchange it for point number 2. Okay, so you have, first and foremost, you have store of value, then you have cash flow. Everybody needs cash flow. I need to pay for groceries at the grocery store just like you do. I need to get gas at the gas station just like you do. I need to buy, school supplies for my kids just like you do. So we all need cash flow. So understanding how we can get into a currency that can give us store of value plus cash flow when we need it, okay, in the real world, intrinsic value, but at the same time, we are at the beginning because we are the early adopters of a lot of these cryptocurrencies across the board. It's going to give you the opportunity to create wealth. I want to share just a really quick story. A friend of mine, he's a very, very large XRP holder. And he's been struggling for the last 2 years because the SEC put a lawsuit, as we talked about, Noah talked about earlier, against Ripple, the company who established XRP cryptocurrency. Now, what happened at this point in time is the value of his portfolio went way down. What's happening now over the last 48 hours is it's 10x, essentially. It's doubled, and his wealth has gone exponentially up just because of one decision. So how can it be that we can create wealth from these cryptocurrencies? Well, it's about getting involved at the right time in the right project. Do we know what the right project is going to be? No, but the timing is now. That I can guarantee you. The timing is now. I've been telling people for the last 5 years, just dollar cost average into Bitcoin. It's all you got to do. You don't have to be an expert at it. Just dollar cost average into Bitcoin, because in 10 years or 15 years or 20 years, if you just left your kids 5 Bitcoin or 10 Bitcoin and you held that in your ledger, in your trust, in your will, in your estate, that could potentially be worth $500,000, $5 million, or $50 million, depending on who you ask, because there will never be more than 21 million Bitcoin ever in existence. And a lot of those have already been lost. A lot of those are lost in dumpsters, lost in landfills right now on hard drives. People don't even know how to recover. So there is a very limited supply of Bitcoin available, and we see that move going forward. So please, guys, if you take anything away from this, dollar cost average into Bitcoin. Now, I'm going to give you the best investment you can make, the best investment advice you will ever get in your life. With this investment advice over the last 3 years, I was able to earn about 3,000% return on my investment. Okay. So this is the best investment advice. This investment advice has been touted by Warren Buffett and some major wealthy people around the world. And the best investment that we can make here is in ourselves. Okay. The best investment you can make is in your mindset, in your skill set, learning how to trade, learning how to get involved in cryptocurrency, learning how to make better decisions, learning how to control your emotions, learning how to be a better version of yourself, because all of those things are going to lead you to a better life financially, a better life emotionally, a better life in your marriage. So when we talk about investments, there's tangible and intangible investments, okay? And I know we're here to talk about crypto, but I really thought this is very important for a lot of people that might be here to learn, okay? On the tangible side, we're talking about crypto today, but that could be in traditional stuff like stocks and Forex and EFTs and options and real estate. All of those I consider tangible assets. Intangible assets is where I want you guys to focus. Okay. If you say, oh, I don't have, $10,000, $20,000, $100,000, whatever to get involved in buying stocks and Forex and cryptos and real estate. Well, guess what? You can start on the intangible side. Start in your education, in your self-education, online courses, personal development, understand personal branding, understand how to use technology and social media to start to put your image out there, to start to put your brand out there. But what all of these things will start to do is it'll start to create a different mindset. You will start to use your imagination and your creativity. You'll start to have a burning desire. And when that burning desire pushes you enough, we call that faith. It's taking the first step. It's getting outside of your comfort zone. The best thing you can do to yourself is make yourself uncomfortable every single day, whether that's mind, body, soul, financial, whatever aspect of your life. You need to understand that these intangible investments that you can make that can cost you $0, maybe hundreds of dollars, can take you to become a crypto millionaire, a traditional millionaire over time. I'm not saying none of this is get rich quick, guys. This is get rich over time. You know, we study a lot of, the book Think and Grow Rich by Napoleon Hill. And in this book, a lot of people think the title Think and Grow Rich, well, this is a book of how to, become a millionaire, or a multimillionaire, or a billionaire. Being rich doesn't just talk about the financial side, but it's rich in relationships, okay? Rich in love, rich in any aspect of your life. That's what we want you to understand. And the verb in there, grow, guess what? An acorn didn't turn into that gigantic oak tree overnight. It takes time, the process of growing. But what we want to teach you here, what I teach my people in the CEO Challenge and the Legacy Pro Academy is growing, okay? Growing is a process. And us as human beings, because we have instant communication, we have instant everything, we have lost our ability to focus on the long term. So we don't want to go through that process. We want everything right now. We want to start and we want to get to the end. That is not possible in creating wealth for our legacy. It's not possible in creating a legacy. So what you as a human need to do is understand how to enjoy the process, how to be in the moment. And so for me, guys, it is hopefully teaching you guys to understand that, yes, crypto is amazing. Our debt projects are amazing. Our IX community is amazing. But at the end of the day, you are the decision maker. You are the captain of your own ship. You will steer your life in the direction that you need to. And some people can say, oh, well, this and that. Well, don't play the blame game. You are responsible for your own life. You are responsible for what you're going to do with your life. So as my title says up here, I'm going to kind of get to the end here. I wanted to do something special. I want to talk about the project of Nat G really quickly. And as you can see here today, I'm going to be giving away 100 million Nat G tokens, up to 100 million Nat G tokens. Okay. If you guys do not know what our natural gas or Nat G token is within our X node community, get with the person that invited you, understand what Nat G is. Nat G is a token that is supported by the sale and production of natural gas within our debt box ecosystem. Now, why is this important? Well, right now, when we're talking about building wealth, and if you guys have a calculator out there, okay, if you guys have a calculator out there, have your phone, I want you to do a little bit of math when you guys are here, okay? Right now, the current value of Nat G is 0.0002, okay? So fractions of a penny. So let's just say you were to purchase, or I were to give you 1 million tokens. Great. Now I have 1 million tokens. It's worth like $100. Well, no big deal, Joe. It's not going to change my life. Well, now let's take that same example 10 years ago. Let's say you had a million Bitcoin. What would that value be today? What would that value be for your child that's just growing up or is now in high school or in college? That is creating generational wealth. Now, can I guarantee you that Nat G is going to be something, as big as Bitcoin? No, but I do have expectations. I do have understanding of our debt box ecosystem. I have the knowledge, And I believe that it's going to increase in value. I don't believe it's going to go down in value. I believe it's going to increase. Now, if that increase is 10%, 20%, if it's a penny, if it's $1, I cannot tell you. But let me ask you a question. If you attended a webinar, let's just say you could tell the story in 20 years, son, daughter, grandchildren. I got on this webinar and they ask you, Dad, how'd you get so wealthy? How did we buy this house? How did we get this? How did we get this? Well, you know what? I somehow got on a webinar in 2023 and they gave away some tokens. I forgot about them for 10 years. I looked up the price. The price was $1. If I gave you 1 million tokens today and you were that individual, and 10 years later or 15 years later or 20 years later, it's worth $1, would it be worth it to you? And I believe the answer everybody is going to be saying right now is yes. So what do you have to do to get access to this $100 million token giveaway? Well, it's pretty simple. Step one, you're going to go register at ixbiz.us. It's a free registration. You're just creating a Xnode wallet account. Okay, that's all. You'll get your username and your temporary password. Once you get that, you will need to set up your Xnode wallet. Step one, create your permanent password. B, verify your account. You'll have to do email verification, SMS verification, and then you'll have to set up, C here, your 2FA. That's your Authy, that's your Google Authenticator, okay? Once this is done, okay, we are going to be giving the next 48 hours. Anybody that creates their account on this platform, ixbiz.us, in the next 48 hours will receive an airdrop, and we'll be giving away up to 100 million NatG tokens, okay? The exact amount I'm not going to disclose because that's going to be dependent on how many people we have. But this is absolutely free, guys. Absolutely free to get natural gas tokens today. Might not be worth a lot right now, but if it's 100,000 tokens I end up giving you, or 1 million tokens, or 10 million tokens via airdrop, it's free token, and it's potentially a way to build wealth long term. Hopefully this gives you guys an idea of what we're doing here at Debtbox with Xnode and our natural gas project. Natural gas is just one of the projects that I'm involved in. There's a plethora of other projects that we have inside of our ecosystem. I'd recommend you check them out, get involved. I want to just say thank you to everybody that was here with us today. Remember, ixbiz.us, okay? ixbiz.us. It's available for absolutely anybody that is not already inside of my community at IX. So this is for new people, anybody that creates their Xnode wallet account via the ixbiz.us, okay? ixbiz.us link in the next 48 hours will receive an airdrop of natural gas token, okay? So with that, guys, that is all I got for today. It was a pleasure being on here with us, with you guys. What I want you guys to take away, just kind of in summary, understand a little bit of our current currency, okay? How our currencies work today, how our financial system works. If I were to give you any advice right now, it'd be to write down these 3 things. Number 1, fractional reserve banking. You can put in Google, what is fractional reserve banking? Study that, okay? Bretton Woods Agreement. What is Bretton Woods Agreement? And everything that goes along with that, the creation of the World Bank, the creation of the Forex market, the creation of IMF, okay? From there, understanding Bitcoin, understanding the crypto industry, and how DeFi can give the power back to the people, how it can give you control of the store of value, of the cash flow, and of the future wealth that you can build. So again, for the giveaway, for the NatG giveaway, it is open to anybody. If you want to invite family members, sons, daughters, uncles, aunts, anybody with an email, anybody with a phone that can download the app, install it on their phone, can participate in the NatG airdrop. That will be going for the next 48 hours, guys. 48 hours. So it is Saturday right now. We will stop it Monday at 12 p.m. Monday, 12 noon here, Utah time. So with that, guys, thank you so much. Gary, I will turn it back over to you, and I appreciate you for hosting. Travis, Corey, Noah, thank you for your amazing talks out there. And I also want to send a shout out to Livia, to Liv, for putting this together. Thank you so much. And to all the Driven community out there, thank you. And we will see you guys on the next webinar. Thanks, Gary.
Amazing. Thank you, Joe. Thank you, everybody. I just have one last thing here to close out with, guys, and that's to give away some more micro nodes. All right, let's I got 10 more for you guys. And then what we're going to do is we're going to be continuing to give them away through Instagram over the weekend. So here are the next 5 right here. Jimmy Tran, you guys, this list, and I'm going to put these in the chat here for you guys. Congratulations. You guys all will be receiving a micro node. And again, all you have to do is support@driventrading.com, send in an email, and they will have your name, and we'll get you all the information and everything needed. And I've got 5 more for you guys. And there you go. All right. So there's the last 5 here that we're going to give away here tonight. Guys, congratulations. Guys, man, incredible information. Noah, Corey, Travis, Joe, again, I can't stress that enough, guys. The knowledge that you guys are generating for the community here and sharing with the community is just remarkable. And this is why we're all here. Appreciate your leadership. And guys, have a great day. Thank you.